Good morning, gang. Good morning, Mark, Wayne, Rob, Andy Man. Good to see you. Erla, nice to have you. Hey, Steve. How's everyone doing today? You guys feeling all right? Ready to get some work done? I hope. Um, Pretty excited. Hey, Hamid, good to see you. Guys, we're just gonna keep doing. Every day is gonna be the same. Patterns that have been proven to win more than they lose. What a great thing, right? If you knew that the roulette wheel would land on black, more, hey, good morning, Miss Veronica. Nice to have you in here. Um, One of the things about trading is you'll never know what's going to happen. You'll never know. But there are patterns that have been proven to win more than they lose, and that's what we talk about in this room. So, for my newer folks, I know I have some new people in here. Let me show this picture real quick because I know personally I got a little put out on day one because I felt like it was too much. And this is how it feels. So, Miss Veronica, this picture is for you. First day feels like a lot of information coming at you, but what happens is repetition is the key. Repetition is how we get to where we want to be. So every day we go through a routine, and every day we go through a process, and we really talk about the same thing and keeping it very simple. And the word advantage is one of my favorite words that we use in this room because we're just trading a pattern that provides an advantage. That's all it is. We avoid opinion and emotion and all those things that damage. And we're just going to keep it real focused. And one of the advantages that we give ourselves every morning is coming to forexfactory.com/calendar and check in news. And I put the picture in the room earlier. And guys, I don't care about anything. I think I have it over here. I took my picture for the week. Anything right of these boxes doesn't faze me one bit. I'm not concerned about what the news is. It doesn't matter to me what they're saying or who's saying it. Every morning I come to forexfactory.com and I look for these red boxes or orange boxes. All of our high impact news for today is done. It was at 8:30. There's some low impact. Probably not going to worry about that. Nothing to even think about until 8:30 a.m. tomorrow. But it's these high impact and these medium impact news releases that can make the market spike. It can make it jump and bump and do things that we really don't want it to do. So I check it every morning. That's the first advantage that I give myself. And then from there, everything that I talk about, so Veronica, Mark, all my new users, all the answers are here. Specifically from the education page, right on the trading guide, or where all the rules are. But the software guide, if you're brand new with NinjaTrader, this is kind of your how-to. Best practices, setting up your computer to make sure that it runs the most efficiently. Building new charts, live access, muting the room, screen capture programs. Excuse me, I'm having trouble talking this morning. Being able to take a picture and post it in the room. This is how we have conversations in the room. Everything from connecting, setting up stops and targets, scaling your charts, all of that's available to you in the user guide. I'll give you guys that link. So if you're in class and you have a question about it, just ask. I got you. But maybe it's after class, you're on the weekend, you're curious about something. That's where you're going to find your answers. And then what I talk about comes from the trading guide. And I always say, guys, I'm not going to keep any secrets from you. I'm not going to hold back and give you a little and then try to sell you more. My promise to you is that by the end of this classroom, you will have every tool that you need to be successful with the software. and you're going to find that success through simplicity. You're going to find that success by not overthinking things. One of my favorite phrases, and got this one from my brother, is you don't have to know how to build a clock to be able to tell time. And that's very much my approach to teaching. So what we do is we talk about this high probability trade for an hour. Every day, same trade, same rules, same approach, because recognition creates repetition. And the high probability trade means that each indicator on every chart agrees with the rules for the trade. Typically, this is when triggers are their strongest. There's no termination conditions, and there's no trouble spots between you and your entry target. And I focus on this one trade, this high probability trend trade, specifically because this is a trade that has been proven to win more than it loses. Guys, this is nothing more than a pattern. In this pattern, if you take it 100 times, it's likely to win 70 to 80, which means that there's a statistical advantage when you follow the rules. And that allows you to not worry so much about the results of the individual trade, but rather focus on the execution. And that's what we're going to do today. And when you have the potential to win 70 to 80% of the time, that success breeds confidence. And confidence is how you're going to develop that trust and be able to enter the market where you're supposed to enter. But most importantly, what this trade's going to do for you is it's going to teach you to read your indicators. Forgive me while that slides over to the other screen. Because reading your indicators is what's going to let you know when the advantages are present. And reading your indicators is about 90% of your day, every day. 90% of your day is not taking trades. It's not entering the market. It's not looking for wins or trying to avoid losses. 90% of your day will be spent reading your indicators, waiting for the advantages that tell you to get into a trade. 10% of your day is going to be actual trading. So to put that into perspective, if you spend 6 hours at your computer today, approximately 36 minutes may be spent trading. The rest of it is going to be you sitting on your hands, being patient, playing solitaire, doing something other than entering the market when those advantages aren't present. But once you're good at reading your indicators, once you look at these indicators and you begin to see these advantages, you're going to understand really with pretty amazing accuracy where the market is likely to continue. And this becomes your entry for the highest probability trend trade that you can take. You're going to understand where the market is likely to go. This is going to help you with stops and targets, and you're going to understand where the market is likely to stop. And these are those termination conditions. These are the areas, the key areas on your chart where the people that move the market react. In 1 or 2 days with the software, you will be absolutely floored at how effective these lines are. And then we're just going to teach you how to take advantage of the space in between and capitalize. And we do this high probability trend trade, again, simplicity. It's only 3 rules. That's it. And really the first 2 rules are the most important in my opinion, because each rule creates an advantage. And rule number 1, strong trigger lines, will give you the advantage of momentum. The advantage of momentum is giving you a market that's likely to continue in the direction of the trend. The advantage of momentum can break those key areas on your larger chart, and that advantage of momentum, thank goodness, covers a lot of the mistakes that you make as a new user. So rule number 1 is going to set you up for success right out of the gates. Rule number 2 is going to make sure that there's nothing in your way when you have that momentum present. And that's where we say no termination conditions, making sure that there's room to the profit targets. And we're just going to call it a clear path. So momentum plus a clear path, guys. These 2 on their own are enough to give you a trading plan capable of winning more than it's losing, capable of being consistent, always having an edge. But we're going to add a 3rd rule, and this is going to be your entry for the highest probability trend trade. And this entry is going to be done with amazing precision, but it's unique to the high probability trend trade. So as you grow with the software, your rule number 3 may change for different entries. We do these 3 rules, they come to fruition on only 2 charts. So I'm trying to keep it as simple as possible. There is a large chart and a small chart. Your large chart is a very broad stroke of a brush. It's a slow moving chart. It's very difficult to see change on it. And we actually use the most current bar, the first bar on the large chart. And that first bar will define the direction of the market. It will define the momentum in the market via rule number 1. And it will define the areas that may be problematic or the ones that have been cleared. And that's where rule number 2 is going to come in. And 66% of your advantages happen on this large chart. When the rules are met, you'll turn your attention to a small chart, to a faster chart. And this really gives you an x-ray of that 1 bar. There's about 20 to 30 bars on the small chart inside of this one bar. We're going to use that to refine the broad stroke of a brush. Good morning, Miss Adriana. And this is where you're going to pinpoint where the market is most likely to continue. This is your entry chart. This will also be a great management chart. But by using this smaller, faster chart, what it does for you is it allows you to reduce risk. It allows you to maximize your profit potential. And I've got a cool picture. Guys, I give a lot of pictures in this room. I share them into the chat box. Steal them all. This is what that refinement process looks like. Inside of this one bar, I put a black box around it. You can see that there is a pullback and a bounce and a continuation with the trend. And we're going to use this refinement process in order to get the absolute most out of our trades. And that's where rule number 3 comes in. I use these two charts, and Nexgen presents these two charts because it's really a reflection of who you're trading with or who you're trading against. And guys, the large chart is the large crowd. It's the men and women that move the market. It's the people that wake up and decide which way it's going to go. These are the people that establish the momentum. These are also the people that react at those key areas. So we're going to let the large chart lead the way. Hey, good morning. So great question, Hong. So what happens is when you open up your workspaces, and Nexgen provides you workspaces, the chart on your left is your large chart. The chart on your right will be your small chart. And I'll pull both of those up for you, and you'll see that the movement is very different. I'll do that in just a minute for you. But large will be on your left, small will be on your right. You're allowed to change that if you want, no worries at all. Make it so it's comfortable for you. But this is how the workspaces come to you straight from Nexgen. And then the large chart is going to be slow. It's going to be what the large crowd wants, guys. And fighting the large crowd rarely works out. The small crowd is your small chart. These are the people that still have more money, more power, more influence than you ever will. But they create fights against that large chart. They create these little retracements. This is that action inside of the bar. These guys fail 70 to 80% of the time, which means that we can pinpoint where their failure point is most likely to happen. This will become your entry for the highest probability trend trade, and it's that refinement process that reduces risk and also gives us the most room to get to the next area. And I share this every morning. We're going to learn the rules for when it's okay to trade. I break each of those 3 rules down individually. I'm going to give you pictures. I'm going to talk about why it's important, what happens when it's not met, and I'm going to give you the tools that you need to study it. You guys simulate and practice. So all of my new people, play on NinjaTrader. Break everything that you can. If you think you see a trade, take it. Break the rules. But what I need you to do, and the quickest way to get to where you want to be, is post it in the room when you do it. You'll notice there's a lot of these screencast links that are dropped in the room, and what they're doing is they're showing me, hey Mark, this is what I saw, this is where I entered, this is where I got out, this is why I did what I did. So every time you present in the room, you open the door for a private session with me. We're going to talk about what you see. We're going to talk about your chart read, which means that I need you to get okay with this capture software to be able to write on there to tell me exactly why you did what you did. Talk about those 3 rules, momentum, path, and entry. And what's going to happen is we are going to celebrate your victories. We're going to work on any challenges that may be there in your chart read. And together we'll work together to get you closer to your goals. So simulate, practice, focus on following the rules, but be okay with the idea that as a brand new user, you're probably not going to get it right every time. You are not graded in this classroom, but the feedback is so valuable to your progress. We're going to simplify a lot. We're going to talk about this high probability trend trade. Once you understand this first trade that we talk about, it's your first trade, not your only trade. Understanding momentum, understanding a clear path, it's going to open the door for a lot more trades. But focusing on the first trade first, getting those advantages down first is what sets you up for the next trade. So we're going to simplify a lot. We're going to keep it very focused. And you need to know what it looks like. What looks are you going to commit to? What do the rules look like individually? What do they look like when they're a trade? And that's really the second part of getting to where you want to be ASAP, guys. Nexgen gives you a spreadsheet when you download the software. I give mine every day. I love to share my spreadsheet. And this is 4 tabs. And I'm going to go through each of the tabs for you. The first tab is the trade tracking tab. And this is where you're just going to create a little trade journal. Every time you take a trade on Simulator, win, lose, or draw, it doesn't matter. You're going to drop it into this spreadsheet. You're going to talk about the momentum and the clear path, because these are the two that really pay dividends. And then you're going to have a whole section for the feedback from class. There are links on how to paste your pictures into the spreadsheet. There's also a great link on how to annotate your chart that I stole right from one of the Nexgen users. But the idea isn't, don't just take the pictures. Don't just drop them in there. Make sure that you're coming back to them. So I encourage new users and old users too. Every morning, open up those pictures and ask yourself what worked and what didn't work. What felt easy, what felt forced. And what you'll find is that you'll begin recognizing those patterns that are bringing you success. You'll begin to recognize patterns that may be taking that success away from you. And when you present in the room, I'm going to recognize the patterns in you. Everybody has a thing. And guys, this is kind of my strong point. After 5 or 6 posts in this room, I'm going to have a pretty good idea of whether you're aggressive or whether you're conservative, or what rule that you're most likely to break. And we'll always work together to fix anything that needs fixing. And the more pictures you take, the easier it becomes. The second tab is the 101 tab. This is the 3 rules in green for the high probability trend trade. I'm going to give you a sheet on how to utilize this one, how to get the most out of it, how to get to where you want to be the fastest. There is the tab, the third tab is your favorite looks. This is how you're going to develop your trading plan. I give you a foundation, that's it. I give you 1 trade, 2 trades, and the looks so that you can learn to read your indicators. Your plan will grow as you grow. And then finally there's the client trades. And this is where I'm not ashamed to say, every time you guys post something brilliant in the room, I'm inclined to steal it and put it into my spreadsheet because I want to come back and study it. And these are clients' perfect trades, not necessarily the high probability trend trade, but what you'll notice as you go through these is that almost every trade on this sheet has momentum, that the path is clear, and then you'll see some creative ways to enter on some of these, but use them to go back and create recognition. There's a section for management, patterns that repeat themselves, and it's crazy the patterns that you'll begin to recognize just through repetition. There is the entry sequence for the high probability trend trade, both long and short, as well as the management approach that I'm going to give you in the plan, and a whole section dedicated to those termination conditions, those areas likely to stop the market. So we go through this every day, guys. Take pictures, take trades, post your pictures in the room, and keep it simple as a brand new user. And I can't stress this enough. There are so many ways to make money with the software, but if you focus on reading your indicators first, and more specifically, if you focus on your entry for the high probability trend trade for a week or two, everything that you learn in your pursuit of that entry will carry you to more trades, to bigger trades, to different management. It's your ability to read charts that's going to set you up for success. So before we get going, are there any questions, especially new users? The first hour feels very much like a lecture, I realize that. The second hour, third hour of class, guys, is 100% designed for feedback. That's when I start clicking on the pictures that you guys post. That's where I started. Too many for here? Too many questions for here? No such thing, Mark. Knock them all out. I'll answer as many as I can. And if you feel like it's too much, I know sometimes people do, email me. Send me a message over there in Discord. I'll make sure you guys get your questions answered. That's kind of my goal. It's almost my job, is to make sure you'll be at it all day. I love it. Keep it simple. And I know you have experience, so keep it simple. And I always tell people there's a lot of brilliant traders that show up here new to Nexgen. Guys, I'm never ask you to change what you're doing, but let's see how we can enhance it. Sometimes we can minimize your risk. Sometimes we can really optimize your profit targets. So feel free to share with me what you're doing, and I'll see how we can enhance it as well. Rule number one, we're going to go for rule number one. Strong trigger lines, guys, giving us the advantage of momentum. On the large chart, the first lesson and the easiest lesson that you'll ever get is that if the background is green, the market's going up. And if the market's going up, you're looking for rules to be met for high probability trend trades long, trading with the large crowd. If it's red, it's down. We're going to look for those rules to be met for the high probability trend trade short. Strong triggers on a large chart, actually on any chart, means that your small triggers, these solid lines, these are a fast moving average. That's really all you need to know about them. Hey, Kenan. And these large triggers, these dashed lines, they're a slower moving average. These two work together to create that momentum, that strength. When the small triggers break above the large triggers, that's what paints your background green. So in order to have strong triggers, the colors of both triggers and background are going to match. Smalls get above the large triggers. Large triggers must be wide, angled in the direction of the trend. And then it's the space that's created between the small and large triggers. And I'm going to take a picture real quick. It's the gap that's created between the small and large. And I like to use this visual for my newer folks. I want you to think of scissors. And when the scissors are open, you can cut. And that open scissors, that gap between the two, guys, that is strength, whether it's going up or down. In a downtrend, your small triggers will break below the large triggers. There's your handle right there. Big blades. That open, that space between the two lets me know that the odds are favorable for the market to continue down. That gap going up, odds are favorable for the market to continue up. You're going to hear in the room all day long, odds favorable momentum. You're going to see people writing it on their charts, OFM, odds favorable momentum. This strong trigger look means that the market is likely to continue in the direction of the trend. This strong trigger look is what can break those key areas. Hey, good morning, Paul. And this strong trigger look is exactly what it looks like when it has the potential to help cover some of our mistakes. When I have strength up, I'm going to use that smaller chart to buy Fibonacci support. And when I have strength down, I'm going to use a smaller chart to buy Fibonacci resistance. On your large chart, it'll look like a tail. We're actually going to be able to pinpoint on that smaller chart exactly where these tails are most likely to form. That becomes your entry for the highest probability trend trade. So if I go to a large chart, and this is a 13.2, so Hong, one of the ways too, you know it's your large chart, is it'll say 13.2 up here in the upper left-hand corner. But I want you to see, and guys, this is without taking a trade. If I take a picture of this chart, on the most current bar, can you guys give me a Y? If you can see that the small triggers are above the large triggers, that the large triggers are wide, and that there's space between the two. This most current bar lets me know that the momentum is up and strong in the market. But if you scroll back, you can see that same strength look going down. You can see strength up. You can see strength down, strength down, strength up. And it remains constant, guys. Strong triggers are always strong triggers, no matter what chart, no matter what time frame. And let me make that a little bigger so you guys can see it. Smalls above the large, they're up, they're wide, there's space. Those scissors are open. Right now there is momentum to the upside, but that's only the first rule. Strength pushes a market. When your scissors close, when the smalls return to the large, the opposite of strong is weak. You have weak triggers. The opposite of odds favorable momentum is going to be anything can happen. For those of you that are brand new, I was an English Lit major. I think there's a lot of importance in language and the words that you use. And if I'm looking to risk my money, if I'm looking to take a trade, I want strength. I want odds favorable. I want strong. I don't want weak or anything can happen. Because when you have weak triggers, smalls inside of the large, this is where you start to see bigger retracements. This is where you see the market change direction. This is where, when you reach those key Fibonacci areas, the market may reverse. Weak triggers right at a red line. Look at the push down. Let's see if we can find weakened triggers. It starts to move up right from an area. Man, termination conditions have been really working today. And I've got more areas stopping markets than weak triggers. There's weak triggers again, bigger retracement before the market continues down. So you can start to use these looks and say to yourself out loud, scare your dog, scare your cat, I have momentum, I have that advantage, or be willing to say, momentum isn't present, it's weakness, I'm not looking for a trade. So guys, that's rule number one. And I like to ask a lot, you're not obligated to answer, is everybody okay with this? New users, remember, there's a lot coming at you. But strength is nothing more than a separation between the small and large triggers. Are we good? Can you guys give me a why if you're feeling all right? If you're overwhelmed, it's cool. I get that way too. Mark, not really? So Mark, thank you for that. So this is what we're going to do. I'm going to take everything off of my chart. Because I think what happens a lot of times in the beginning is there becomes a lot of noise on a chart and it feels like a lot to look at. So I'm going to take everything off except my trigger lines. And Mark, this is part of the drill that I'm going to give you before this first hour is over. These are my small triggers. When they are above the large, when there is space between, this is strong triggers. And then the same is true going the opposite direction with absolutely no noise. Your momentum has nothing to do with price bars. Your momentum has nothing to do with the lines on the chart. It is nothing more than the relationship of the small and large triggers. Space is strong. Does that make sense, Mark? It's just a gap between triggers. And what happens a lot, and I know I did it, is as I started to say things like, whoops, I'm going to put my indicators back on, is I would say things like, okay, I see the separation between the triggers, and then I would keep trying to add layers. But there's a line. Well, the line has nothing to do with it, but the price bars are inside, and the price bars have nothing to do with it. Strength is nothing more than the trigger lines and the separation. Let it be simple. And what I find is everybody in this room is brilliant, and we all overthink a little bit. So let's let momentum be nothing more than separation between the small and large triggers. And what you'll find is that the market continues in the direction quite a bit when you have that look. Once you have momentum, we have to make sure that we're not trading into a termination condition. And I'm going to go straight to the user guide here. And a termination condition is nothing more than a Fibonacci-based indicator. Fibonacci is why most of you guys came here in the first place. And it's a Fibonacci-based indicator that may reverse the market. Notice that May is a different color and that May is underlined. It may reverse the market. These areas stop the market more often than they don't, and that's why rule number 2 is in play. And we're going to use a comparison of the trigger lines, the same trigger lines that give us momentum, in the areas to determine whether or not we have the advantage of a clear path. So those areas are blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1s, couple divergence highs and lows. And guys, that's great to read it, right? But let's look at it visually. What lines can stop the market? I dropped this in the room as well. Horizontal lines on the large chart, guys. You don't have to know how they came to be. You don't have to understand the math in them. But if you understand that a divergence high line, this magenta line that prints if there's a loss of momentum at the pivot, red Fibonacci resistance, when the market is trending up, this is a point where the market may stop, bounce, or reverse completely. Yellow 1-to-1s, this is what they look like. If price is trending up, they may behave as resistance. If price is trending down, they may behave as support. Blue Fibonacci support and divergence lows. You don't have to know why these come to be, but understand that they are all capable of stopping the market. And then what we're going to do is we're going to use a simple comparison. We're going to let the large crowd push to these areas. We're going to let the market reach one of these lines. Remember, these guys react at these key areas. So what we're going to do is we're going to let price reach the area. And this begins the process of determining whether or not it may stop the market. Decisions are made at lines. That's the easiest way to think about it. Decisions are made at lines. So if I haven't reached a line, the decision-making process hasn't started. But once price reaches resistance, all I have to do is ask myself, where are my triggers? It is this simple. If they remain below resistance, it's a termination condition. It may reverse the market. There may be a fight there between the buyers and sellers of the large crowd. Guys, it may reverse the market completely, create an untradeable bounce. So the simple recipe, brand new users, if price reaches an area and the triggers remain below, don't trade into the area. It may stop the market. If price reaches support and the triggers remain above, no short trades into that area, it may stop the market. Guys, this is the most basic form of understanding termination conditions. So if I open up a large chart, once again, I'm going to take a picture of the chart so that I can scribble on it a little bit. And I want you to see this. Price reached Fibonacci resistance. The triggers remain below. Ladies and gentlemen, you knew not to trade into that area. This is what we call an avoidable loss. Price reaches support, those yellow 1-to-1s. The triggers don't break through. No short trades into that area, avoiding that loss. The same is true on support, a divergence low. There it is again. There it is at support. And guys, you're going to say to yourself, well, hell, Mark, if all these lines stop the market, how am I ever supposed to make any money? Guys, there are opportunities in between these lines. There are opportunities to make money in between these lines. But what it does is this giant red flag that says, hey, not yet. Don't try it. Even with odds favorable momentum, if the triggers remain above support or below resistance, sit on your hands and relax. Can you guys give me a why? And guys, it takes a little study. And I'm going to tell you right now, trading isn't the best way to learn these things. Going back and seeing how often these lines stop the market, how often these lines create a bounce, that's how you develop trust in the methodology. That's how you develop recognition. Get in the habit of taking pictures. So if price reaches an area and the triggers remain below resistance or above support, don't trade into the area. Can you guys give me a why if you're comfortable? And if not, let's go through some more examples. I'm totally cool with that, guys. I have 0 time frame. Okay, Mark, I would recommend talking to Chris. Give him a shout. And I'll pass along your need for conversation right now over to Chris. All right, I just told him to give you a call. Remember, guys, we're not trying to become professional day traders on day one. What we're doing is trying to learn these simple concepts and really allowing them to be a little easier than it seems like they should be. So if I can't trade into a line, I'm sitting on my hands and doing nothing. Well, when can I start looking for that next trade? When my small triggers and large triggers, you know, Mark, day 2, really day 1, right? It's okay to not be on the same page. And I tell this to everybody when they start. It takes a day or 2 to even understand the language. It really does. You're going to hear terms that you're not familiar with. You're going to see things that you're not comfortable with. And you're going to try to turn everything that I say into a trade. And the one thing that I do in the first hour, guys, is I don't talk about taking trades. I don't talk about management. I don't talk about wins. I don't talk about losses. What I talk about is let's just break these 3 concepts down individually and really focus on them as an individual. And then you will piece those together as a trade ultimately. But first and foremost, we talk about momentum. and where to find it and what does it look like. And that's it. That's all. Mark, it says the system, you say the system is easy. It is. But it's just like anything. Mark, I'm assuming at some point in your life you learned something new, right? And guys, I'll use my wife as an example here. So my wife last year went back to school for her MBA. My wife is accustomed to being successful. My wife is brilliant. I don't know why she picked me, but she did. And she was taking one of her MBA classes, and she goes, Mark, this is hard. And I had to say to her, well, no shit. It's brand new. Pardon my French. It's okay to be hard. Give yourself a little bit of grace as you're coming through. We're all type A's. We're all alphas. And we're all successful. And that tends to be true. Everybody in this room has probably found success in whatever they've done outside of trading. And it's difficult to go back to that student role. I know it is because I've done it. I went from the absolute top of my game to not knowing anything, and it's difficult and it's frustrating. So let's just keep it simple and let's not put the pressure on ourselves to understand. And we do all learn differently. Amen. I can't pay attention directly. I have to pay attention indirectly. That's how I learned. So if you were lecturing me, if I was listening to this class, I would also be drawing in a sketchbook, and it would let me absorb. So y'all's feedback helps me teach and helps me say things differently. So I get it. I've been there. Remember, I've been day one as two. I've been day one myself. So let's just try to not be traders in day one. Let's try to just break these concepts down. And I want you to give yourself a week to start to understand. But what you will also understand within a week is that what I'm teaching works. You just have to learn it. You're going to see Nexgen users posting pictures all day long of following these patterns and finding success. And just understand that you're going to have to learn how to use it. You're learning a new skill. But my promise to you is that I'll do it with you and I'll work with you and I'll make myself available and we'll just do it hand in hand. So no triggers, no trade. Easiest way to say it, guys. When the small triggers and the large triggers get to the other side of this blue line is broken. Support is broken. It behaves as resistance. And guys, this is the beginning of the clear path. And every line that you reach will be a termination condition, at least for a moment. Every time price reaches support and the triggers haven't broken, this is a termination condition. And the path will not be considered clear until both lines of the small and both lines of the large get south of support. Or both lines of the small and both lines of the large get north of resistance. So termination, clear path. And it's going to be a termination. And then if it breaks, it'll be a clear path. And these, for the brand new users, are the only two options. And what you'll find, and once again, I'm going to keep bringing up that large chart, is that areas break all the time, guys. Smalls and large get above resistance. It behaves as support. Your path remains clear until you reach the next line of resistance. And then once the small and large get above this line of resistance, it behaves as support. And it's clear until you hit the next line. 90% of your day will be spent doing nothing. And once you understand it either is or it is not a termination condition, it opens the door for the next look, guys, for your second trade in the mix. And I'm going to tell you right now, this will be the majority of your trades. When your small triggers absolutely smash through the area with odds favorable momentum, but your large triggers haven't cleared yet. This look is what we call a 50-50 look, and it means that 50% of your triggers are through and 50% of your triggers are not. And what that means to you is that this area has the potential to break because of odds favorable momentum, because of strong triggers. This area has the potential, but it will never be considered broken until the small and the large get through. The majority of your trades will be this 50-50 look, and I'm going to give you a plan to take it. But you have to understand that when price reaches the area and no triggers break, it's okay to sit on your hands and do nothing. And when the small and the large get beyond it, it's broken and clear. And then there's going to be this potential to break. Look, and I will give you a plan. You couldn't send pictures? Your plot isn't working right? No problem, Adriana. If you go back, take them, annotate them, you need to send them to me privately. I'll give you any feedback you need, I promise. Otherwise, go have fun today. Get on that scooter. Guys, a clear path is high probability. Rule number 2 is met. The potential to break is what we call medium probability. There's a small issue on the chart. We're going to work around it. So, brand new users, focus on it's either a termination or it's not. And understand that once you've got that recognition, it opens the door for your second trade. But that potential to break is nothing more than that potential to break. The smalls break through here, the large don't. That area never breaks. The smalls broke through here, the large did not. The area never broke. Smalls broke through, the large did not. The area didn't break. That potential is just potential. I will give you a plan to capitalize with the highest chance of success. There will be times when your path isn't clear. This is what bums out my new users. Guys, this is 90% of your day. All of these Fibonacci areas are direct reflections of the emotion in the market, the ups and the downs. And sometimes that emotion gets stacked. And it's okay to do nothing. It's okay to sit on your hands. It's all right to not be in a trade. The futures markets trade billions of dollars every day. You only have to capture $400 a day to be in a six-figure income with it. So sometimes we're just patient, and sometimes we get excited because this area is about to break and realize that we're into another area. And rule number 2, trading into areas is the most broken rule because it takes the biggest amount of patience, guys. But what you'll find is that rule number 2 gives you the ability to see exactly where the driving forces of the market are likely to make decisions. And very often, rule number 2 can keep you out of consolidation, can keep you out of chop. And 90% of your day is spent waiting for advantages. 10% will be trading based on those advantages. So allowing it to be simple initially. It's either broken or it's not. It's going to set you up for those potential trades. And guys, the sky's the limit. Once you understand momentum and whether or not you should be trading into an area or waiting for the area to break, opportunity shows up everywhere. It really does. And guys, that's rule number 2. Both of these are on the large chart. Both of these are on the big chart, guys. The slow chart, the first bar of the large chart lets you know if you have momentum, and it also lets you know if you have a clear path. 66% of your advantages happen on the large chart. These first 2 advantages are enough to create a trading plan. But we're going to define the entry for the high probability trend trade right now. We're going to get into the market where the market is most likely to continue, where that small crowd is likely to fail. So I'm going to ask you guys, and it's okay if you're not 100%. Are you with me so far? Momentum leads the way. And it may take you a day or 2 to recognize it comfortably. And once you have momentum, let's make sure that we're not trading into a line. Don't overthink it. Call it a line. Don't trade into a line. Lines can stop the market. Lines are where decisions are made. But once you have both, guys, we're going to go pinpoint where that small crowd's likely to fail. We're going to use a limit order to buy or sell a pullback at areas inside of triggers. But here's the deal. If I have momentum and I have a clear path and I turn my attention to the small chart, there's going to be one termination condition that I'll allow the small chart to give me. When the rules are met for the high probability trend trade, there's only one time where rule number 2 isn't met on a small chart, and that's 3 divergences in the same price range, 3 losses of momentum in the same price range. Anytime you see that cyan line from a low or that magenta line from a high, what it means is that price came down and formed a pivot, and about 2.5 bars up. If there was a loss of momentum in this move, if momentum is dragging behind price, you're going to see that line print. If you see 3 of these lines, don't take the next short trade because the market may stop. It may bounce. If you see 3 from a high, momentum isn't following, no more long trades. This is your termination condition, guys. And it becomes more powerful if you incorporate that rule number 1 lesson of weakness. If the small triggers are inside of the large triggers, then you have weakness coupled with a loss of momentum, guys. It's more likely to stop the market. And even more so if that third pivot is higher than the previous, creating a head and shoulders. So this is the only time on a small chart where I will say to myself, even with momentum, even with a clear path, I'm no longer looking for the trade. But if it's not there, we're going to define our entry, guys. And the precision is there so much that we're going to use a limit order. We'll be able to wait for the market to come to us right at an area. Fibs, mid-bands, yellow 1-to-1s. Lines on the large chart can be problematic. Lines on the small chart create a bounce in the direction of the trend when the rules are met. And we're going to allow those areas to be inside of triggers, guys, and more specifically, inside of what we call favorable large triggers. So your large chart has large triggers, and very often price, you see it a lot, pulls back to the large triggers. It's pretty much a gospel truth. Price pulls back to the large triggers on the large chart. Well, the cool thing is that price does the exact same thing on a small chart. Price tends to pull back to the large triggers on a small chart. So what Nexgen has done is they've put the triggers from the large chart onto the small chart. We call them the synthetic triggers, and these are the ones that kind of have steps to them. When the large and the synthetic triggers are overlapping, picture 2 snakes riding piggyback. When they're one on top of the other, when they're wide in the direction of the trend, guys, this is what we call favorable large triggers. Because we expect price to return to the large triggers when they're overlapping, we only have one location on the small chart where we expect price to return. When you put lines inside of those triggers, fibs, mid-bands, yellow 1-to-1s, it's like a brick wall that you're throwing a ball at. This is where we expect the bounce, at the lines inside of triggers. So the further apart these triggers are, the bigger the correction point. The tighter they are, the smaller, and this is what allowed you to reduce risk to increase accuracy. And it doesn't matter if the lines are inside of the large or the synthetic, guys. Your small chart may pull back to these large triggers. You have 1-to-1s and fibs inside of those triggers. They may produce a bounce. But price may also pull back to those synthetic triggers, the large chart large triggers. And there's a mid-band inside. And that may be the point of bounce. So what we're doing is we're creating a window. From the areas inside of triggers, this red box represents where the market is most likely to return and bounce and continue with the trend. And this is how you're going to define your entry on that smaller, faster chart. When the large chart says up, when the large chart has odds favorable momentum, when the large chart has a clear path, notice that I'm very adamant about saying when the large chart rules are met, you'll wait for a reversal bar on that smaller, faster chart. You're going to feel like you're missing out all the way up, and your palms are going to get sweaty, and you're going to feel that gnawing in the back of your mind saying, jump in, jump in, jump in. It's going to go without you. That's that fear of missing out. Guys, this pattern happens all day long. Reversal bar. It signals the beginning of the pullback. It signals the beginning of the fight from that small crowd. The reversal bar is not your entry. When you get the reversal bar, look for those trigger lines. That's your red box. Large, synthetic, overlapping, one on top of the other. The trigger lines are not your entry. Instead, we're going to identify the areas within. Fibs, mid-bands, and yellow 1-to-1s. And you're going to create a window from the highest point of support for a long trade to the lowest point of support, and notice that it's all caps. Language becomes very important to identifying entries inside of favorable large triggers. So you're going to activate a limit order just above the highest point of support. because the large chart is screaming to the upside. Because the large chart has nothing to create a bounce, we're going to get in at that highest point of support. And if the small crowd can push back, guys, you're going to be in that long trade with all of those advantages. Any line beyond the triggers, on the wrong side of the triggers, as I like to call it, any line below the lowest line of the trigger lines, guys, this is outside of that window. We don't include these areas for entry because the market has gone beyond its correction point. And we're going to use this for stop placement. And when the market is going down, when the path is clear, when the momentum is strong, we're going to wait for the reversal bar on the small chart, the signaling the beginning of the pullback, that fight from the small crowd. At the time of the reversal bar, you'll identify your triggers, large and synthetic, one on top of the other, and then you're going to look for lines inside. And guys, this is one of those magical moments where there is one line inside of favorable large triggers. This line represents the point where the small crowd's most likely to fail. This line represents the point where the market is most likely to bounce and continue in the direction of the trend. Your limit order goes a tick or two below that lowest point of resistance, and this becomes your entry for the highest probability trend trade. Any area on the wrong side of the triggers is not a part of the equation. If the market makes it up here, this isn't where we want to be in a trade. And guys, you're going to be able to go through and practice these, and I've put the sequence in the spreadsheet. So if I'm looking for a short trade, the rules must be met on the large chart. We're going to go through this step by step. Smalls below the large are wide, they're angled in the direction of the trend. The space between the two lets me know that I have strong trigger lines. Can you guys give me a why if you're with me, especially new users? That is the first look in looking for this high probability trend trade. And then once I have that strength, I have to make sure that I haven't reached the next area, right? Because decisions are made at these key areas. And I want to make sure that my small and large have gotten below the previous area. I want that clear path. I don't want any decisions being made when I'm in the middle of looking for a trade. When the rules are met, I'm going to wait for the reversal bar on my small chart to signal the pullback. I don't get scared because it's close to a line, because my clear path is defined on a large chart. I don't get scared if there's a divergence. It takes 3 of these to ruin my good time when the large chart looks like this. So at the time of the reversal bar, the first step is to identify my trigger lines, large and synthetic. From the top of the large or synthetic to the bottom, guys, this is where I expect price to return. I don't know where inside of it's going to bounce just yet. All I've done is define my trigger lines. Trigger lines are not my entry. Once I see my triggers from the top to the bottom, I've got it in my head. I've got to look for the areas within, guys. And I have Fibonacci resistance, mid-band. And resistance can be red Fibonacci, magenta mid-bands, or yellow 1-to-1s. I don't even have 1-to-1s in the equation here. But my window of opportunity, the point where the small crowd is most likely to fail, extends from the lowest point of resistance to the highest point of resistance. Once again, there's those all capital letters inside of favorable large triggers. So once I define my window of opportunity, the point where it's most likely to bounce to continue with the trend, my job is to activate a limit order, to right click on my chart, and to put a limit order 2 ticks below that lowest point of resistance. And at this point, guys, if you're the praying sort, get to it. You've done everything that you can do. You've insisted on momentum, you've identified your clear path, you've pinpointed where the market is most likely to continue, and you're waiting for the small crowd to come to you. You don't chase trades. You're better than that. And the cool thing is that if the small crowd has it in them to push up to your limit order, you're in a short position. You're in a short position with odds favorable momentum, with no terminations, and you're there from the area inside of favorable large triggers, the point where the market is most likely to continue. The first hour of my classroom every day is devoted to pinpointing this entry. Being able to identify whether it's going up or down. First, odds favorable momentum. Second, making sure that it hasn't reached an area. And then saying it's time to go to the small chart. And waiting for the reversal bar patiently. And that reversal bar signals the beginning of the fight, the beginning of the pullback. So at the time of the reversal bar, super methodical, guys. At the time of the reversal bar, from the highest point of the triggers to the lowest point of the triggers, this is where I'll look for my areas. I'll look for fibs, mid bands, yellow 1-to-1s. So I'll create my window of opportunity, and my window of opportunity extends from the highest point of support inside of favorable large triggers to the lowest point inside of favorable large triggers. This black box is where I expect the bounce, where I expect the market to continue with the momentum, with the direction, with the clear path. So the only thing left to do is activate a limit order right at the top of that window, a tick or two above, and pray that the small crowd gets there, because there's nothing else that you can do. And guys, this is your entry for the highest probability trend trade. Both of those sequences that I just went through are right here in your spreadsheet. And if you start clicking on pictures, what you're going to notice is odds favorable momentum. You're going to notice that this one had the potential to break, and that it pulled directly back to resistance right inside of triggers. And the circle at the entry coincides with the tail. This is going to become a little study thing for you. And once you can pinpoint entries, guys, give it a couple weeks. Don't put pressure on yourself. Once you can pinpoint where the market is most likely to continue, you will understand where the market should not go. It should not go beyond those trigger lines. It should not go beyond those areas inside of trigger lines. And ladies and gentlemen, anything that wins 70 to 80% of the time. Do I have any math people here? How many are you going to lose out of every 10? If it's going to win 70 to 80, I'm obligated to lose 20 to 30%. That's how math works, which means every 10 trades I take, it's going to hit my stop 2 to 3 times. And our stop is placed where the market shouldn't go, 4 to 5 ticks above that window of opportunity, 4 to 5 ticks generally above those trigger lines, guys. And if the small crowd has it in them, they will get you. Be okay with that. Don't worry so much about the wins or losses in the beginning. Worry about whether or not you had momentum, a clear path, and pinpointed your entry. That's going to pay dividends, because great entries create manageable trades. The great thing is that if they don't get your stop, more often than not, they're going to give you a reversal bar in the direction of your trade. You will reduce risk 2 ticks above that reversal bar. And it's not uncommon to see Nexgen users risking $30 or $40 a trade, 3 or 4 ticks a trade, because of their great entries, because of the reversal bar. And it's okay to take losers, guys. Losers happen. But you've got to pinpoint your entry. You've got to understand where the market is most likely to continue, because this is what creates your advantage. So I'm going to show you a couple things. Common objections from new users, if you will. This is the top of the bar on the large chart. This is what it looks like when it's time to take a trade. And guys, this is exactly where price will be. You'll be all the way up here at 97.05. And a lot of you are going to say, but Mark, there's not room to my target. There's only 8 ticks, and that's okay. Good heads up. You're looking for those lines. But remember, we're not getting in at the top of the bar. We're allowing it to come all the way back to support inside of favorable large triggers. This is where your entry's from, guys. And from entry to trouble, I think this one was like 33 ticks, approximately $330. So if price doesn't reach the area, it's a target. It's not a termination. And this is a great understanding of where the market is likely to go. We'll use that for targets. If the small triggers on the small chart, turn against you, if they turn red, we don't care. I need that little loss of momentum to get me back to my area. But the large chart, that one bar, will continue to have odds favorable in the direction of the trade. The slow chart versus the fast chart. But Mark, there were 1-to-1s and the triggers didn't get through it. Guys, terminations are defined on the large chart. And this is why if my large chart rules aren't met, I won't even look at my small chart yet. But once they are, I'm only focused on an entry. I'm only focused on getting into the market where the market is most likely to continue. Other things that happen. Sometimes we get anxious. Have you guys heard of the fear of missing out? And it doesn't quite hit our entry and it starts back up, and I see people put their entry right about here. It's going without me. Let me chase the trade. Guys, all you've done is increase your risk, and all you've done is decrease your profit potential going this way. Learn to hold on for that best of the best entry, because it's going to give you the least amount of risk. And once you get a reversal bar, it's going to be even less. And guys, this is it. You can go back on your large chart. You can study those tails on a large chart to help you understand. I've got so much stuff open. Whether or not you had a trade on the small chart. So we'll find one that's moving. And here's one just for grins, right? The momentum is down. Look at that. Multiple divergences right at resistance. And then they break out. The smalls are getting below the large. The large, they're trying to break through the area. And you'll notice that it pulls right back 2 ticks below a mid-band inside of those triggers. And it continues down with the momentum. Pretty cool, right? That's your pattern. And if you scroll back, tail end of momentum, there's one of those tails. Let's see what it looks like on the small chart. What time was that? Ooh, that was early in the morning, wasn't it? There it goes. Ooh, that one didn't quite make it. That may not have been our trade. But you can begin to start putting these looks together so that you can build a trading plan with advantages. And guys, that's definitely a Monday market there in the S&P. I know there were a couple because you guys took them yesterday and showed them in the room. Odds favorable, potential to break. If I scroll back to it, what time was that? 10:30? Directly to resistance, right inside of favorable large triggers. So guys, this is how you're going to study. This is how you're going to develop a little bit of trust in these rules. Would you guys like to go through an entry together? Kind of do a little bar by bar? Anybody? Yeah, cool. Awesome. So when it's time to look for a trade, when it's time to say, all right, here we go. I've got momentum. This area has the potential to break. And guys, all we're doing now is pinpointing where the market is most likely to continue. That's all we're doing. So let's do this. Let's do this again. Let's get rid of all of the noise. I want you guys focused on momentum. I want you not overthinking things. So let's get just triggers on there. Odds favorable momentum. Does everybody see it? Can you recognize that? That's what it's going to look like. And the market's going to be screaming to the downside. And there's nothing in the way. My rules are met on the large chart. And if I turn my attention to the small chart, everything says down. And it keeps going. And I'm getting nervous. And I'm thinking to myself, man, I'm never going to make any money. This stinks. What am I going to do? How am I going to get paid? Who's going to feed my dog? And then that magical reversal bar, guys. The reversal bar prints. And my job when that reversal bar prints is to either mentally or physically draw a box from the lowest line of the triggers to the highest line of the triggers. And this yellow box represents where the market is likely to return. Is everybody with me so far? This yellow box is not where I expect the bounce, but rather where the price bars have the potential to come back to. And then I'm going to create my window of opportunity, guys. So it's going to go from the lowest point of resistance, it happens to be yellow 1-to-1s, to the highest point of resistance, which happens to be red Fibonacci. And this represents the point where the market is most likely to bounce and continue in the direction of the trend. My job is to right click below, oh, it's not going to let me, price is trading in the wrong area live, and put an entry a tick or two below the lowest point of resistance. So guys, this white bar is your entry. Is everybody with me? I'm not jumping in on the reversal bar. I'm hoping that the small crowd can push. And guys, I'm in a trade. I'm in a short trade with momentum, with a clear path from the lowest point of resistance, and my initial stop goes where the market shouldn't. My initial stop is going to be here beyond those triggers. I like to give it 4 or 5 ticks, guys. I am very willing to say they have to come get me. I'm not going to just give myself up. I'm not going to put a stop below resistance. I'm not even going to put a stop inside of that correction point. My stop's going to go where the market shouldn't. And it goes up again. And I'm getting nervous and my palms are sweating and I'm seeing negative equity. And it goes up again and oh my gosh, my wife is going to be so mad. And again and again and boom, I get that reversal bar that says, you know what, Mark? Take a deep breath. We're going in the direction of the trend. We're going in the direction of the momentum. We're going in the direction of the clear path. Why don't you go ahead and reduce your risk a couple ticks above that bar? And let's see how this one plays out. And momentum for the win, ladies and gentlemen. And I want you to see something cool. The top of that little pushback is the top of that tail. We don't trade the tails. We trade the pullback. And I want to show you the refinement process again one more time. If I open up this chart a little bit and I draw a box around this one bar, and I messed that one up. If I put a box around this one bar, there we go. It's all of these bars. The refinement process allows us to pinpoint the entry. It allows us to reduce the risk. It allows us to maximize the profit potential. And ladies and gentlemen, this is my first hour every day. My first hour every day revolves around nothing more than pinpointing your entry. Because once you can pinpoint an entry, then you can manage your trade. So this is where I start giving you guys all your gifts. I'm going to drop all of these in the room. Don't worry. Chart Reading 101. I created this to help new users break these rules down individually, guys. Because in order to get to where you want to be, you have to be able to look at your chart and you have to start reciting out loud. I have momentum. I have a clear path. Let me look for an entry. Or the opposite. I don't have momentum. To hell with it. I don't have a trade because I insist on advantages. So this is designed to help you recognize these advantages individually. So take 25 pictures each, guys, of strong triggers and weak triggers. Take 25 pictures each of a clear path and termination conditions. Be able to recognize the difference between the two and be able to do it quickly. That's what the second tab here is for. I've done a lot of work, guys. I've already put 51 pictures of strong triggers in here. And if you click on those pictures, every one of them not only has arrows pointing to the rule being met, but a description of what it means to have the rule met. Smalls above the large, large or wide, space between, strong triggers, odds favorable momentum, rule 1 met. And guys, what I'm going to tell you without hesitation is that if you take 25 pictures of each of these rules being met and not being met, and more importantly, you annotate the chart, the picture you took, you talk about why it is strong triggers, you talk about why it's a clear path, you talk about what that advantage means to you and what rule it pertains to, guys, you're going to be able to piece these looks together to create a trade. This is the fastest way to get to where you want to be. It's not taking trades, but rather taking pictures of advantages and learning to trust them. And then as you do that, because I fully understand that we're all brand new here, I'm giving you this one as well. What does it look like to have the rules met? Well, is the market coming from a strong top or bottom? Guys, this is a lesson that everybody's going to learn inside the first couple weeks. All that means is that a termination condition reverses the market. And you can take a high probability trade without it, but anytime you have a strong top or bottom, a termination that reverses the market, it means that a decision was made at a key area to reverse everything. And the trades that set up beyond that, go in the other direction, typically have a higher chance of success. Do you have odds favorable momentum? Guys, here's the picture. This is strength. This is weakness. So as you go back and take these pictures, police yourself a little bit. Make sure that you're taking the right pictures. No triggers through, not a clear path, pretty easy to go back. How many termination conditions could we find? There's the S&P. Remember when I said rule number 2 would keep you out of trouble? There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 termination conditions inside of 2 hours. And not one of you had to lose a penny because rule number 2 wasn't met. Pretty outstanding if you ask me. When the smalls are through but the large are not, it's just potential. But once they both get beyond, that path is clear. And then how to define your entry, guys. So as you go back and take these pictures, you have a cheat sheet for it. And then you also have one as you start to practice these trades, this trend trade checklist. I've never had anybody follow this checklist to the letter, truthfully, I have to say truthfully, and do worse than 70%, guys. And if your goal is to get paid, if your goal is to win more than you lose, in the beginning, following a plan that offers that ability to win more than you lose makes sense. Print this out. Put it on your desktop. Get your most delicious crayon and make sure that you can mark yes to all of these. These are the same rules that I want to see you writing on your charts, guys, creating a correlation between the picture and the words that go with it. And then finally, the piece de resistance. I'm going to give you the KISS plan. What is the KISS plan? It's the Keep It Simple Sunshine plan, because HR said I can't use the other S word here in the classroom. This is a stepping stone in your learning journey, guys. This is the beginning. This is stage 1. This is your first trade, not your only trade. I can't stress that enough. New users love to come play trade police. Don't do it. Focus on you and focus on these very simple rules. This plan is designed to optimize your chances of success with the high probability trend trade. And then next, if you scroll down, with that 50-50 trade. But through simulation, through study, through class feedback, through continuous practice, you will be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. My promise to you is that when you learn how to read your indicators, you're going to see more patterns, you're going to recognize more entries, you're going to be able to change your management. But in the very beginning, keep it super simple, Hong. Am I saying that right, Hong? Okay, awesome. I worry about stuff like that. Guys, this is the beginning. And this is by no means the end. And your simple plan for consistency, the easiest way to get to where you want to be in the very beginning is don't fight the large chart, guys. Do not fight the large chart. My brother wrote this book. And for those of you that are brand new, my brother wrote the software. I'm almost 5 years deep now into it. You'll see the same last name. How to commit financial suicide in one easy step. I like to share this. This is tongue-in-cheek, of course. Warning signs your friends are in trouble, guys. They're trading against strong triggers. When you fight the momentum on the large chart, guys, you are putting your tiny little self against a giant force that wants the market to go one direction strong. Chapter 2. Warning signs your friends aren't paying attention. They're trading in determination conditions. So belt, if taken properly, for sure. But the problem is that people don't take it properly and they still expect it to win 80%. That's why I give you guys a plan on how to take it the best of the best ways. So make sure that you guys put that in there. Taken properly, right? If you take one hydrocodone, it can help with your pain. If you take 100 hydrocodone, it'll end it forever, right? So taken properly. Guys, don't fight the large chart, and you'll avoid about 70% of the problems that most people have. And then define your entry. Be hell-bent on defining your entry. I tell people, give me 20 days to learn this entry. You'll know that it works long before then, but you're going to have to practice a little bit. Andy, your goals met for the day. Awesome. Go get a new phone so that you can scroll the internet and look at the pictures. Did you get tattooed on Friday the 13th? I hope you did. Guys, once you define your entry, great entries create manageable trades. Great entries let you know where the market shouldn't go. Great entries optimize your chances of success. Even the KISS plan is going to give you pictures of what it means to have the rules met. And once you enter the market, and I'm going to tell you guys, this is a truth. Management is where the pucker factor kicks in. Management is where people start to get panicky, guys. Great entries create manageable trades. So in the very beginning, as a brand new user, taking that high probability trend trade, if you keep your management very simple, very if-then, very pragmatic, if you will, it's going to alleviate a lot of the emotion. It's going to alleviate a lot of the opinion. It's going to alleviate all of the guesswork. So your great entry is dependent 100% on pinpointing where the market is most likely to continue. And guys, once you define that window of opportunity, you know where the market shouldn't go. This is your initial stop. 4 to 5 ticks beyond the trigger lines. And there's only two options. There's only two options. You're either going to get stopped out, totally normal, natural part of a positive equity curve. It's a cost of doing business. Or you're going to get a reversal bar in the direction of your trend. And guys, if you get the reversal bar rather than the stop out, your job is to put your stop 2 ticks above that reversal bar in a short trade, 2 ticks below for a long trade. And then I want you to sit on your hands. I want you to put them in the air. I want you to roll 6 feet back from your desk. And you're either going to get stopped out for a tiny little loss that doesn't faze you too terribly much, or it's going to run to your first target. And with all those advantages, it's more likely to get that first target. And your first target, KISS users, brand new peoples, is only $100 from your entry. And if you're trading crude oil, I'm going to tell you right now, you will get the reversal bar and the first target in the same bar very often with great entries. Once the first target is hit, that contract is off, that money's in your account, they can't take it from you. This is where your palms start to dry up. This is where the butterflies in your stomach start to go away. And this is where you're going to move your stop to break even. You're going to take all of the risk off of this trade. Not because break even is the best stop, but because you're learning to trust the method. You're learning to trust the entry. You're learning to trust the strength on the large chart. So your only option is you're either going to get stopped out, break even, and I promise you it doesn't hurt bad to have that happen, or it's going to run to your second target. And again, KISS plan users, your second target is only $200 away from your entry, which means if it goes the distance, you just made $300. $300 in the account, they can't take that away from you, and it doesn't matter what happens next. The goal for the KISS plan is to learn how to get paid, to learn how to get into the market, to learn how to take the emotion and create a plan for exit. And guys, this is my first hour. I drug it out a little bit. I have some new people. And then one more thing. You will craft a plan tailored to your personal goals based on your experience reading the indicators. Your management will change dramatically as you grow with the software, guys. But I want to share this with you. That $300 trade, I like to share this. Look, guys, $300, if that's the best you do every day, that's adding $75,000 to your trading account based on $300 a day. You're going to see the potential to really be somewhere in this range pretty easy once you get your groove on, once you learn to read your indicators. But $300 a day is 75 grand. It only takes $200 a contract to put you into six figures. So I encourage new users in the beginning, practice getting paid. Learn how to get paid. The goal is to make money, not to give it back. It's okay to exit. You will get so good at your entries that you will believe in your heart that you will find the next trade. I'm going to give you one more thing. And I'm going to give you all of these that I'm sharing with you guys. There's two things that you have to know before you sit down live. One of the biggest cardinal sins of day traders is that by day 3 they think they have it and they put their kids' college fund into the market. There's just no reason to do that, guys. Simulator lets you practice. Before you sit down to trade when you're not on simulator, you have to know why you'll enter the trade. And ladies and gentlemen, I have given you a rock solid plan for entry. You have to know why you're going to exit the trade. I've given you a rock solid plan for exits. Both of those are a mandatory thing. And commit to having the rules met, ladies and gentlemen. Opinions are very much like assholes, right? Everybody has one and they usually stink. You will never know what the market's going to do. And sorry, new users, every now and then I swear, I try not to. HR hates me. Your rules are based on patterns that have been proven to win more than they lose. So when you deviate outside of your rules, you're deviating outside of that statistical advantage. The more consistent in action you become, the more consistent in profits you'll likely to become. Guys, all you're doing is trading a pattern. You're not trading a feeling or an emotion or news. You're literally trading a pattern that has been proven to win more than it loses. And it's the process that yields results. It's the momentum, it's the clear path, it's the entry area, it's following that rigid set of rules. And rules help remove the emotion associated with trading, guys. You will never know what the market's going to do. You'll never know what the outcome of your trade is going to be. The only thing the market has is up and down. There's just ticks. So we trade patterns that have been proven to win more than they lose. So brand new users, you can stop reading after these two. If you're in a high probability trend trade, you have to know what it's going to take to get you out. And the KISS plan rules are the first way, and you'll grow. And eventually you'll learn to read your charts, and you'll change things. And you'll say, oh, this is an exit condition. This is a reason to hold longer. And then when you add the 50-50 trade, not only are the rules for entry a little different, but also the management. So don't burden yourself with getting confused between the two. Focus on the best of the best. Let it become easy. And then this one becomes your next project. And then maybe a momentum trade becomes your next project. And then maybe an HVA trade becomes your next project. So keep it simple. Keep it focused, guys. I just put all of these in the room. I gave you the exit conditions, the high probability trend trade checklist, the KISS plan. I've given you the PowerPoint that I used to teach every day in form of a PDF. I've given you the chart reading, and I've given you the daily goals. When I told you in the beginning of class that I'll give you everything that you need to be successful, I meant it. I don't want to keep secrets from you. The only thing, and I say this every day, the only thing that I have not given you is experience. I haven't given you the repetition that you need to become comfortable. I hope I've given you, I don't know, at least a little inspiration to want to learn this. And guys, it works. It does work. I wouldn't be here if it didn't work. You just have to learn to work it. So that's my first hour. I'm going to take a little break. You have everything that you need. And when I said that you have everything you need to be successful, guys, you have the rules, you have a full working copy of the software, you have the platform to run it on, you have entries, you have exits, and you know exactly how to study it. The only thing that you don't have is repetition. The only thing that you don't have is experience. And guys, I'm going to tell you right now, see, that one didn't follow the rules. Not so much. The easiest way to get to where you want to be is to practice, is to take pictures, is to annotate charts. But more importantly, guys, the easiest way to get to where you want to be is let me help. let me help you on your journey. Let me answer your questions. Post your pictures in the room. Post your questions in the room. Participate in this classroom and make the next hour and a half a discussion, not a lecture. So that's what we're going to do. I'm going to go sit on my hands for a minute. And then when I come back, we're going to look at your charts and we're going to go back to these three things on every chart: momentum, clear path, and entry area, no matter what kind of trade it is. And I'm not going to grade you on the trade that you took. We're going to point out advantages and disadvantages, and we're going to talk about whether or not you're following a plan and following the rules. So you have to tell me what you see. Kenny, you say, hey, Mark, I have deviated from the KISS plan recently with not great results. LOL. We all do it. Going back to fundamentals, the KISS plan has the first target at 100. That would be only 8 ticks. That's it. On the S&P, Kenny, $100 is 8 ticks. Absolutely. And then the second target of $200 would be 16 on the S&P. On crude oil, it is going to be 10 ticks and 20 ticks. Awesome. And guys, I'm going to tell you right now, you will deviate from the KISS plan. You'll start forming opinions when you get good at reading indicators. If you do that and your results start to hurt, it's okay to go back. Kenny just did that. So awesome, guys. I'll leave you with, do we want crude oil or the S&P? Let's do the S&P. Notice how the triggers are green, but the background is red. I don't have momentum. The large are above, but the smalls haven't broken. I don't have a clear path. Mark, these are futures. But can I tell you something? And let me show you this. I did this with my wife and a friend of hers. Well, Mark, can you tell me what market this is? Not at all, right? The indicators don't know. They don't know if it's a stock. They don't know if it's a future. They don't know if it's Forex. They don't know if you're trading options or if you're hedging soybean. They have absolutely no idea. It's not the market that we trade, but rather the patterns. And that's what makes this software so valuable. Is that it doesn't matter if you want to trade Tesla, if you want to trade Ethereum, if you want to trade your Apple stock. When our father retired from HP, he had a lot of stock. My brother built a chart and gave him an area where he should sell it to capitalize the most before a potential drop, and it worked beautifully. So don't get hung up on the markets. Let's just focus on the patterns. That was the S&P. Crude oil looks exactly the same. If I open up the NASDAQ, it's going to be the same bars, the same triggers, the same areas, the same patterns coming through. And it's hard. It's hard not to get hung up on the market, right? But I could build a market on soybeans, and it looks just like crude oil, and they're so different. But what is pretty consistent is that when I've got all the momentum in the world and everything says down, it pulled right back to resistance right inside of triggers. And sure enough, it continued down. And if I back up over here and take that same look with an up bar, it pulls right back to support right in the triggers. And eventually the divergences push it down, right? And then it continues up. So it's nothing more than the pattern. So I totally get, I've got a friend that's learning the system, Mark, and all she's ever done is stocks. And she keeps trying to make future stocks. And I'm like, just learn the patterns. And she's like, yeah, but what about, stop, just let it be what it is. You guys built some charts yesterday, right, Mark? Can you do me a favor and just blow up your large chart and post a couple of them in the room? If you do that for me, let's do a read on your charts and see if we can find those similarities. And I sent Chris a message asking him to send me a picture or two as well. But what you'll find is that the patterns are consistent no matter what it is you're trading. No worries, we'll get you there. I'll load up some Forex stuff this afternoon, but let me do this. I'm gonna log into my Coinbase and I'm gonna build a chart real quick. And I'm gonna build, I'll do Bitcoin. And Bitcoin is a huge market. So I'm gonna make a 55.8 with a dynamic Renko bar. And this probably isn't big enough because I think my brother does a 13,000, but I want you to see something as Bitcoin comes up. Hopefully it comes up. I think my Coinbase works. I don't really use it. It's loading, so we'll see what happens. But what you'll find is that the patterns are the same. Whoa, they killed Bitcoin, didn't they? We'll see what it looks like when it comes up. The patterns are the same. The pullbacks are the same. The fights are the same. The fibs are just as effective as are the triggers. So I'll let that load up and we'll come back to it. But guys, I've got to go refill my water real quick. When I come back, flood the room with questions. Flood the room with pictures. And guys, it says that it ends at noon. If we find our boogie and we're just cranking through it, we'll keep going. I don't mind at all. So trade away, take your pictures, and look. Without momentum, we're getting a bounce off that fib. You guys knew not to try along. That mid-band didn't even make sense, right? So, cool stuff. I'll see you guys in 5. Too excited about being here. I get too excited. All right, so let's see what we're doing. Oh, that's the NASDAQ. I wonder if that Bitcoin chart came up. Well, there it is. It's the same looks. I don't know if my template came in, though. I think this one's too small. It might be. So guys, I'm going to go up and I'm going to start looking at the pictures. For those of you that are brand new, I've got to scroll up through the entire chat box to get to them. If I miss a picture, if I miss a question, and right now Pete's going, dude, he always misses one of my pictures. Make sure you let me know because it's never intentional. And when I look at your pictures, the one thing we're going to do is we're going to talk about momentum, we're going to talk about path, and we're going to talk about entry. So Tom gets us going. He actually put this in this morning around 6 a.m. And you can see his yellow box showing where he entered. In his annotation, did he have odds favorable momentum? And he says, yes, absolutely. That first advantage is in place. And under clear path, he says, not sure with so many lines. He's pretty sure it's one of those 50-50 looks. And he was right. It is. It is one of those 50-50 looks. He turns his attention to the smaller, faster chart. And then the reversal bar prints. And he gets in at the bottom of the area, 68.80, right here. Stop loss is where the market shouldn't go. First target is hit. Second target is hit. $300 trade. So guys, even though this isn't your trade, even though this isn't your chart, this chart has momentum with the potential to break. The pullback to the area inside of triggers, correct stop placement, keeps you solid, and sure enough, the market goes straight to his $300 goal. What an outstanding trade. So for my newer users, if you have questions about anything that you're seeing, if you have questions about someone else's chart, please feel free to ask. Pete, that is your trigger point, isn't it? Not everybody that annotates a chart actually took a trade. Sometimes they just annotate. They go back and study. And that's what I've found is not every marked up chart was an actual trade. Sometimes they just go back and they see it and they mark it up and they develop that recognition. So you may not see the markers. And then Jonathan says, check it out, Mark. I've got odds favorable momentum. I'm directly into a termination condition. And Jonathan, you didn't write that on there, but we know that it's true. You reached a blue line and the triggers remained above. Instead of waiting for the pullback, there you go. That's what I thought, Tom. Instead of waiting for the pullback to areas inside of triggers, Jonathan jumps in right at the bottom of the move and gets stopped out right before the correct entry and misses the move down. Silly awesome. I love it. And he says if he waited for the right entry, it would have been a good trade. And guys, this is one of those things, adherence to the rules. Learning how to be patient, to wait for the pullback, to not let that fear of missing out take over on you. Great entries create manageable trades. And when you jump in, you're more likely to get stopped out at the correct spot, at the entry point. It happens a lot. And then Jonathan says, when everything is going up and the path is clear, I'll take a momentum style trade right off the area. And hopefully that one worked out. But guys, that's triggers up, direction up, path is clear. He lets the small chart clear, and there's a little snapback right to that line at the triggers where he takes his entry, and that market is heading north. Beautiful trade. And then Tom doubling up on us. And newer users, if I'm going too fast for you, tell me to slow down. Please tell me to slow down. All right, odds favorable momentum, yes. Clear path, no, it's a 50-50 trend trade. And then this is a momentum trade, right? This is not a 50-50 trend trade. This is you jumping in with momentum, hoping it works out, right, Tom? which is okay. So whenever people present this trade, and I love this trade, I'm a huge fan of this trade. Let me show you the difference, Tom, trading into an area versus just letting it clear. This one, if that fib is going to hold, you're going to get absolutely slaughtered. If you let the price bars get above trouble, you have clear sailing. Do you see the difference? And this is one of those things. Trading into areas is rarely the right path, because you've got a similar trigger look here, and if you trade it into that fib, you lose, right? But if you let it clear, which it never did, then you have that clear path. It's a good look. It's a great look, but this is one of those things, and this is one of those lessons, new users, where I may notice, hey, we could probably, you're going to give up a couple ticks, but you're going to increase the likelihood of success. Great trade. All right, so you said, I'm willing to take the trade because of momentum, because you trust momentum. That's cool. I don't disagree with that thought. But let me show you something, and this is where I aggravate people. How did you feel about the momentum going into this area? Right? Or the momentum into that area? Or the momentum into this area? Or the momentum into that area? And I do this, guys, because these lines hold, even with momentum, more often than they don't. And that's the whole idea there, is that when you know where these lines are, you don't have to hope they break. You can just let them break. There will be more trades. It's a great trade, Tom. But that's where I kind of get a little naggy, and I know that I do. Odds favorable, 50-50. Right at the mid-band inside of the triggers, and sure enough, it goes down. And then, Tom, great example. Directly into that termination condition, and look how much you gave back rather than just getting paid at the line. So you're out at 69 flat. You could have been $150 better on that second contract by just trusting that these lines can stop the market. What a great lesson. What an awesome picture. And you entered the reversal bar, stop loss 12 ticks. So you were shooting for that 200, right? Yeah. But this is where adjusting your trading plan. You knew exactly where the market may bounce. It's all right to get paid there. Remember, guys, that the goal is to get paid. And when you see it, it's all right. You guys will be so good, you will find the next trade. Everybody does. But you just don't believe it in the beginning yet, because you're developing trust. You're developing recognition. And once you learn to trust it a little bit, guys, you'll be amazed at what you pull off. And then Pete, this was a look at the short. You're trading crude. Areas on the wrong side of the triggers, once again. Yeah, he's 4 weeks in, Hong. So here's my favorite. I'm going to take Pete's trade, and we're going to do two things with it. The first thing, and this is for Hong and Veronica and Mark and whoever else is new. Here's the triggers. Whoops. Here's the triggers. Once you're on the wrong side of the triggers, guys, there's no telling. And he's also into a termination, and he also has weak triggers. And there was nothing good at all, not one advantage coming into this trade. But the difference between new users and old users is that new users will say, okay, I made a mistake. Let me talk about it. Let me think about it. Let me annotate a chart. Let me worry about it. Once you're experienced, you go, wait a minute, I screwed that up and everything's going up strong. Let me make money the other direction. Let me get it all back plus some. And that's where Pete excels, and that little bit of experience coming in. But guys, this is what we call avoidable losses. Trading indetermination conditions. Trading outside of those triggers. There's just no reason to give that money up. And then everything says down. And then Tom, there's a good example, right? Into the fib creates the bounce. And then once you start to clear the fib, it makes it a little easier to get down. Nice trade, Pete, again. Pete's awesome. I learned from Pete, too. I learned from all of you guys. It's a lot of fun. All right, let's see who's next. We got Pete on the double up. All right, I've got Wayne. Is that 4 of them, Wayne? 4 of them. Cool. All right. Strong top. Termination reverses the market. You get the white bar off of the termination. Smalls below. Trail the stop after 2 bars. And exit at the 1-to-1 and reversal bar. And then Wayne, every now and then, we get people that are really good at following rules. You're one of those people because this is John Novak's white bar trade. And you nailed it perfect all the way down to management. And guys, this is not a high probability trend trade. This is taking a shot after a termination using a third chart to help put it together. And man, you killed it, Wayne. What a great looking trade. I mean, you did it perfectly. And this one is not a strong top because the triggers make it through the line. Not a strong top. So you broke the rules on the white bar. And you traded directly into, see how you have odds favorable up? Every trigger's up. This one was too soon. Even though it worked, this one is too soon. Triggers are wrong. Once they start to get below, that's when you start looking for it. And then you get that odds favorable, clear, and there was your pullback right to support. And down it goes. So you're finding your way with it. But this one, with the fast above the large, you broke rules a little bit there. That's down, down, down. There is no 1 up, 1 down there, though. Now here, you didn't get 1 up, 1 down. This is your only 1 up, 1 down, which gives a great management opportunity. Jerry, I rolled everything. So I'm on the 1124 now on crude. It was split. Do you see it, though? Down, 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 down. Wayne? No up down there. That's your only up down. And that's perfect. Good luck. And I like that you're practicing the new stuff. This is a strong top again. No triggers through from a line. Everything says down. There's your white bar. The small triggers roll. You jump in and it flies. And since you didn't get the reversal, JTFI after the 1-to-1, hell yeah. And then just get paid at a line if you want to, Wayne, right? Only you can decide if 2 points is enough for you. That's right around $100 each contract. And this is where this chart, Wayne, this is where that 1 up, 1 down gives you an opportunity to try to capitalize on that whole move, because you'll get fluctuations to follow behind. Yeah. Same time frame, just different range. This is a 5-1, this is an 8 range, that's a 13-2. So this one leads the way. Strength and termination. This confirms the strength. The white bar helps confirm the top, and you're just looking for your entry. And sometimes they don't give one. And if they don't give one, you're absolutely right, just jumping in. And then you have to make the decision on whether or not you get out of the blue line. But we had this lesson yesterday. As long as price doesn't close on the other side of those triggers, it's going down. Were you in here for that yesterday? As long as price doesn't close on the other side of those triggers, it's gonna go down. Let me scroll up to yesterday real quick, because if I'm not mistaken, I dropped like 3 of those pictures of it happening. I'll just do 2 of them. But we were talking about using that for management yesterday. We were talking about it. And here's a great example. I take profits where I take profits. I have a plan. I have a very precise entry exit plan. But I never got a close. And it went all the way to the fib. And then it turned around right off of that fib. And I followed my plan. And it never stopped until I got the reversal bar. So for you guys looking for those bigger moves, that's a great way to do it. Strong top, odds favorable, no clear path. Trailing stop behind the up, down, up, down, up, down, up, down. Perfect. And I think that's perfect use, Wayne. You get 1 up, 1 down, there's your new stop, comes down, 1 up, 1 down, there's your new stop, comes up, 1 up, 1 down, there's your new stop. I think it's awesome. And then when you get extended at the outer band, you jump ship. Great job, dude. And then Hong, Wayne's I think 2 weeks in. And he's already going a little next level, a little more advanced. Guys, everybody's different. Don't compare yourself to somebody else's time frame though. Some people pick it right up. Some people need to focus a little longer. There's no wrong answer. Triggers up, 50-50. Not a great entry. Break even. 33. So traded directly into a termination condition, Pete. Directly into that termination condition right there. And then second divergence takes you out. So good management. If it runs, it's great. If it doesn't, you're aggressive enough with management that it's not a big deal. But there's no reason to trade into lines. You just don't have to. Sometimes you'll choose to. But it's okay to avoid them, guys. It's okay to not trade into lines. And then Miss Adriana. Trading the NASDAQ. Coming off those 1-to-1s. Potential to break. Perfect entry. First target was filled down there at trouble. Second target, you were stopped out on a reversal bar. Beautiful. Momentum, perfect entry, allowed you to get paid. It didn't hit your second target, but that first target was at 215. What a great trade, Adriana. And then Pete, weakened triggers, not quite broken, no strength here. Can I offer my 2 cents on this trade? I hope you don't mind. And guys, I'll do this sometimes. So Pete, this is a momentum trade that you're taking, right? I just want to be sure. Yep. So Pete, you don't have momentum. You don't have momentum. So just logically, does it make sense to take a momentum style entry with the absence of momentum? Of course not. I'll answer that for you. You don't even have to type. Your smalls are inside of the large. Your smalls are working inside of the large. This isn't your best look for this to work. And we get excited about the entry, and sometimes we forget about the rules. So you took a momentum trade without momentum. That would be like taking a long trade in a downtrend. Amen. And Pete, trust me, that's why I know that lecture so much. Because I've done this enough in my own trading and had my brother going, how are you taking a momentum trade without momentum, Mark? And what's funny is when you just stop and think about it for a second, you're like, oh, gosh, That makes a lot of sense, but in the heat of the moment, it doesn't always click. All right, Steve Diego. Strong triggers. I love it. Clears trouble. I like it. JTFI. Target was trouble. That fib wasn't there. You jump in. And it just goes. And you say, with that much momentum, you ignored these one-to-ones. And then there's that momentum trade. Beautiful. All the momentum. Absolutely, Hong. Because in order to have momentum, there has to be separation between the small and large. Day one, and you've already got momentum down. I love that. So do you see here on Steve's chart, smalls, large, separation, everything says up? And I told you, once you start to recognize this, you'll find more opportunities. And he just jumps in with all that momentum and everything saying up, and you got caught on the fib update. And all that momentum carries him right to the key area. And what a beautiful trade. $620 at 9 a.m. $620 by 9 a.m. Just for grins. Let's see how his life would be if that's the best he could do every day. That's not such a bad earning. Not such a bad life. Steve Diego, great use of the indicators there. And then Doug, I always count on Doug to show me the picture perfect. He says weak momentum down, but you're beginning to accelerate. The smalls are starting to break away. The scissors are starting to open, right? So we're at the very beginning of that momentum push. And your path is clear. And you get a perfect pullback directly to a mid-band right inside of triggers. And it just takes you down to the next key area. What a beautiful trade, Doug. Nicely done. Hong, let me think of how to answer that. How much momentum do you need before getting in? So let's keep it simple initially. How's that? And let me show you something. Let me go back and bring a picture up real quick. So in the very beginning, Hong, your highest chance of success is going to come from, as long as there is a separation, your rule is met. Does that make sense? As long as these two aren't touching, you have momentum. You have enough. And then what you'll find as you grow with the software a little bit, I've got pictures for everything, is this is the best. And then when one line gets inside, you're actually going to say to yourself, oh my gosh, momentum is slowing. One line has worked inside, but I'm pretty good. There's a clear path. Let me see if there's an entry area. So you'll work into this look, and eventually you may even get into the point where this look, where you find opportunities. But the one thing is if you're going to take a momentum trade, the best is always the best. And in weakness, you simply can't have it. So this is kind of a good example of how you'll progress with the software. The more you recognize patterns, initially, let it be perfect. Let there be separation. Your next level will be one line in. And then eventually you may find a way to capitalize without that momentum. And when you have that, you will be relying on that clear path. You will be relying on that entry area. Does that make sense? Great question. And thank you for asking questions. That's what makes this class awesome. Because we all think about things differently. All right, I think Andy's gone, but we'll get him anyway. Andy says consolidation. That was that 12 termination conditions inside of an hour. And Andy says, you know what? I know that I've watched it consolidate, and I know that they've given me areas. Let me wait for everything to agree, and I'll trade from the edge. and I'll try to get to the other edge. And it worked out beautifully. Not a high probability trend trade, not even a clear path. Hell, not even areas inside of triggers. But Andy still managed to make money on that one. Low probability scenario. And then there's that momentum, and there's that jumping in on the way up and getting paid. Repetitious. I like that word. Repetitious. And then, Tom, if you're in here, do you see how much easier it is when you let the area clear and pull back? That's that Nexgen momentum trade, the one that they teach that there's rules. That's the one right there. It's all patterns, right? It is all patterns. All right. Belt. Bum, bum, bum. Strong bottom. Heck yeah. Termination. No triggers. Off it goes. Let me see where you got in here. Back to support again. Everything goes. Momentum is up. Odds favorable. Almost a clear path. You jump in. And then it pulls back and gives you the perfect trend trade. Right at the area inside of triggers. And you've got that HVA line from John's new workspace. Pretty effortless, right? Guys, do you see the look? Odds favorable. Haven't reached the area. Pull back to the mid band right there at the triggers. And sure enough, Belt makes his money. Nice job, Belt. All right, Morgan. Odds favorable? Yep. 50-50? Absolutely. Potential to break, but not quite broken. Poor entry because I thought it was going to go without me. That's what I get for chasing. Since I was not in triggers, though, you took it on sim. So you jump in, fear, and it comes right back to the perfect entry. 32.25 maybe? Which means that you could have made your $100 and gone break even, but since you jumped in, you just took a loss. So Morgan, get up and run a lap. But you know you have to do this every now and then. You have to make mistakes. You have to jump in too soon. You have to hold too long. Guys, if you don't, you never learn. If you've ever spent any time in a gym, the one thing that they say, if you really want to grow, you have to lift to failure. You have to take yourself to a point where things start to go wrong. And that's where the body learns, guys. And Morgan, you're going to remember this. And Belt, you're right. You have to ask the same question over and over. And you have to take the same pictures over and over. And you have to repeat the same rules over and over. And then one day, it just clicks, right? All you married guys, how long did it take before you started putting the seat down? Right? How long did it take before you started closing cabinets? And Belt, I never get tired of repeating myself. Every time I talk to you guys, it's a lesson for me. I'm pretty selfish. I appreciate the lessons that you guys throw in the room just as much because it reminds me in my own trading. Hey, I remember Morgan jumped in on this one. Mark, don't do it. And then Morgan, there's the momentum style trade over here. I know you were looking for those a little bit every now and then. But there it is again. Smalls break, snap back, giddy up. Belt, weak top, perfect read. Odds favorable, heck yeah. You did something good down to here. I like it. And then enter at the area with a reversal bar, exit at trouble. It was too fast to move, stop. All right, Belt, truth in advertising, are you ready? And guys, I'm going to get you on this one. Whoops. Enter in area with reversal bar. So here's your area. Do you see it, Belt? This is your entry, brother. Good stops keep you safe. This is your reversal bar. So that would be your entry after a reversal bar. And you are in 2 ticks above the fib. That's an exit. You went long. Wait a minute. Nope, that's a close. Hold on. Maybe not. That might be in. So the reversal bar was very fast. That's when you could catch it. It was all the way into the fib. And then just help me out. What was the trouble that you were into there on the correct side of the fib with every indicator down? What trouble did you see there? One of them was your target. The other one, it did not start bouncing around. There was 0 bounce there. You don't have 1 up bar. Not 1 up bar. How do you define a bounce? I know, but how do you define a bounce? I call this a bounce. This 3 ticks against your trade is not a bounce. That's fluctuation on a smaller, faster chart. You had finally cleared trouble and had wide open skies with every indicator agreeing, and you jumped ship. You let something talk you out of it. And my guess is because your entry wasn't where you wanted it to be. So because you were in so low, you started getting a little nervous, right? And that's okay. That's normal. That's part of it. So one of the things that I like to ask myself, guys, when I'm in a trade, especially if I feel my pulse racing a little bit, is I use the magic phrase, what's changed, right? Well, there's a difference because the profit was given here, 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 but it was right here that you said, oh shit, look at the fluctuation. And then you validate your emotions by saying take the profit when it's given, right? So watch this. I'm going to write a management plan. My brother made me do this a couple times. He's a jerk. Here's my management plan. Here's what it says. When I finally clear all trouble and every indicator is in favor, jump ship if I get a 3-tick fluctuation against my trade. My brother used to do that. Write a plan for what you just did there. When I finally get clear of all the trouble, when I finally get clear of the fibs, when every indicator agrees, jump the hell out if it ticks a couple against me. And guys, this is why you have to have an exit plan. And this is why you have to stick to an exit plan and why you have to know your exit rules. Because that doesn't make sense, does it? And Belt, I'm not whipping you here. But sometimes we got to think about it like this. When everything finally agrees, hell, there's a lot of people that would have been jumping in right there. And you talked yourself out of the perfect trade. You finally got through all the trouble. This right here, and I want you to see the bar there. This bar directly into a fib, you stayed in. This bar looks exactly like it, clear of everything, it talked you out. Isn't that crazy? I've done it a million times, Belt. That's why I know this. But this is one of the reasons This is why every morning, one of the things that I tell you guys is that you have to know why you'll exit, and then you have to commit to that exit plan. Because the second you let your emotions take over, you're going to miss your move. Because there's this what if monster. And the what if monster will do this. When it's time to take the perfect entry, the what if monster will say, but what if this is the one that doesn't work? Don't get in at the best spot with the least amount of risk. Wait for it to go 5 points in the direction of the trade, and then you're going to be safe, right? So the what if monster will keep you from taking the perfect entry. And then once you're in the perfect trade and everything says down, the what if monster is going to say, well, what if this one fails, even though every indicator says it's going down, and you're going to find yourself getting out of trades. So you've got to learn how to tune out that voice in the back of your head that isn't telling you to follow rules. And it's there, guys, and it's loud. It is so loud. It'll make you sweat. You will pucker a pleat right into your leather chair. Gap theory. So Tom, it is super close to gap theory. What is the gap theory for you guys wondering? It's not quite, because your triggers are not a full bar away. So the gap theory says, for my new users, and I'll go through, and there's some great examples of it in the spreadsheet, is that if price accelerates away from the large triggers and hits an area, whether it's a fib, a mid-band, one-to-one, whatever, if these large triggers are above this gold line, this reversal bar marker, so anywhere from here above, then there's room for an entire reversal bar before it hits those triggers, which means that price is likely to close the gap back to those triggers. Tom, yours is close, right? It should be no trade because of the termination anyway. But it's got to be a full bar away. And let me go. I've got a couple pictures of that. I've got pictures of everything, guys. There should be room for an entire reversal bar before it hits those triggers, and that's your gap theory. And the gap theory doesn't say go long. The gap theory does nothing more than say, if you try to take a trade long before it closes that gap, you're probably going to get run over before it happens. So great question, Tom. Management's the hardest part. Belt, I wanted to say that before we called it. And ladies and gentlemen, I do not trade the NASDAQ live in class. I typically don't even have this up. I don't remember why I opened it. So directly into a termination condition. So let's go through the process. Mark, Veronica, Hong, do I have odds favorable momentum? That's the first step always. I talk myself through this. And everybody, play along, please. Do I have strong triggers? Do I have strength? Do I have momentum? Do I have a market that says the odds are favorable for it to continue down? What do you think, guys? Separation, scissors open between the small and the large. Hey, Tom, take care, man. Thanks for being here. Do you guys see it? Can you hear me? I'll answer it. The answer is yes. I have momentum. Thank you, Veronica. Don't be shy. All right, so now the next question, do I have a clear path? Let's go through, let's say the rules out loud. Price reached an area, triggers remained above. So Hamid, exactly, I don't have a clear path. What does that mean? That nothing on that chart matters. Without a clear path, nothing on that small chart matters. Because my money is worth the best entry. It's almost too simple, isn't it? And look at the fluctuations on the small chart, guys. Decisions are made at key areas. You can see it here. As it got close, the buyers tried to push, but the sellers won. Once it hit the line, the buyers pushed, but now the sellers are pushing back. You can literally see the fight at the area. Look at it here. Buyer, seller, buyer, seller, buyer, and then eventually the sellers take over. Right at the key areas. Fluctuations. Do you guys see this? I think for me, these are some of the most impactful images, because right there at that key area with weak triggers, that's where all this nonsense happens, guys. This is what we're avoiding. This is what rule number 2 does for you, is it gives you the opportunity to stay out of positions when the advantage is gone. Does that make sense? I hope. And then it's just rinse and repeat. That's all it is. It's just rinse and repeat. It's learn how to identify a look. Directly into resistance. If you went long at the mid band, you probably lost. Weak triggers. That was a tough one. 90% of your day, ladies and gentlemen. And then what happens is eventually you find a way to capitalize outside of those high probability trend trade rules. And that's where we're all headed. That's where everybody in this room is headed. If you're not there yet, you're going to get there. Just keep practicing. Here's one of my favorite images, guys. This is the Mark Novak story. And for those of you that are brand new, let me tell you about me. So I spent 30 years in the service industry. I was the general manager of a super popular Tex-Mex restaurant. Worked my way up, and in 2020, right before COVID hit, I had my second spine fusion. Novak men have notoriously bad backs, and it took me out of my career. I couldn't do it anymore. That was it. And my brother said, "Hey, Mark, why don't you learn the software, man? You've got COVID stipends, you've got unemployment, you're healing, why don't you learn the software?" And I was like, okay, let's do it. Looks like fun. And this is where my brother told me, and guys, I'm telling you, my brother wrote the software. My brother has owned this company for 27 years. He's been trading day traders for 27 years. And he said, "Mark, all I need you to do is write down a set of rules." That's the KISS plan. Take pictures of them, of what it looks like to have your rules met. That's using the spreadsheet. And he said, "Mark, just post in my room. Post in my room so that I can give you feedback." And I said, "You know what, John Novak? To hell with you. I'm not going to follow your path. And right about 30 days in, I had convinced myself through poor trades and lucky wins that I was ready to go live. And I remember it like it was yesterday. 21 trades in less than 3 hours. I decimated my account. $5,000 in a couple hours, guys. And I had to come to this realization where I felt like I didn't know shit. And this is the same feeling that you get over here. You know it looks like fun, but you're like, whoa, I have to learn stuff. And right here, almost everyone that I've ever worked with has reached this point because we're all very prideful and we're ego driven. And when you reach this point, this is where you have two options. And most people go through this. They either quit, and I don't want to see you quit because I do believe anybody can do what we do, or they follow the path. They say, you know what? Now I'm going to do it the way Mark suggested. Now I'm going to start taking pictures, and now I'm going to follow a plan. And now I'm going to learn the rules. And I'm going to simulate it. I'm going to post in the room, and I'm going to ask questions. And guys, that's when you start going here, and you get to that I did it point. And if you ask any successful trader, they've gone through this. So what I did is I designed this classroom, and I've got a lot of autonomy with this classroom. Initially, I only taught the first hour, and I taught it in the afternoons to brand new users. I taught the 101. And then my brother realized that it wasn't fair that he was in front of a classroom and not the market, and he wasn't trading his own software. So I took over this class about 2 years ago. And I've tried to take every lesson that I've learned, every failure that I've had, and I've had every one of them, guys, and try to relay that to you guys so that you don't have to make the mistakes that I make over and over. And the key to everything that we do and really getting to where you want to be, guys, is that path of least resistance. And to minimize your learning curve, you got to post pictures. And I know it's terrifying. It is terrifying to put yourself out there and risk being wrong. But if you win and the rules are wrong, you may have a short-term victory, but a long-term failure. How are you going to know the difference? You need feedback. I'm here 15 hours every week. I've never ignored an email. I've never ignored a message in Discord. You need feedback, guys. You need to know what you're doing right or wrong. And one of the things that I try not to do is I don't shame you for being wrong. We look for a solution to make it right. And if you're on Simulator and you participate in class, you can't lose any money. It's impossible. All you're investing is time. But you need someone to tell you what you did right or wrong when you're new. And it's part of what we do for new traders. Adriana, I just sang your praises and I turned on my camera and did a happy dance and I can't believe you missed it because it was outstanding. More moves than Jello. It was. Thank you for backing me, Belt. So let's check it out, Adriana. This is NASDAQ, so we're coming from a termination. You've got amazing momentum. You've got the potential to break, but not a broken area, right? And you take the perfect entry right at Fibonacci resistance, right there at the trigger lines. You even got a market flow signal to make you feel good. First target's at that trouble, that divergence low. You said it got filled. And then the second target didn't. You got stopped on the reversal bar. And Adriana, it's a beautiful trade. You let momentum lead the way. You knew that it wasn't a clear path, I hope, which means that you were going to get paid quickly. And even a trade that failed, you were able to capitalize. Very nicely done, Miss Adriana. Any questions? They don't all go, right? They don't all turn into winners. But once you have a management plan, guys, it's not uncommon to see failed trades turn into profits. Morgan had a great picture of that earlier. Awesome, Adriana. I'm glad it is. You like complicated. You're a complicated lady. Great trade. Hi, Jen. You just sat down? You notice some charts have bright green and pink like sun the sail charts, sun the sol charts? Should I speak to IT and get your charts updated? Some charts. Jen, no. So this is something that John Novak has introduced. This is something that John's been working with for about the last 60 days. And all it is, you know that market flow chart? That third chart that some people use? So what he's done is he's overlaid it on the entry chart. And one of the biggest things is a lot of people are super excited about it. And they're like, yes, more stuff, more information, life is good. And now I'm going to find all these trades and I won't have to follow rules because market flow is magic. And then the one thing people are going to forget, Jen, is that market flow is only good when the rules are met. How much per quarter? It's $12.50, Wayne. It's $12.50 a tick and $50 a point. But there's some ideas with that market flow chart, Jen. And I like it. I'm a fan. I'm not going to lie. I think it's pretty cool, and I definitely see the value in it. Oh, come on, template. Here we go. And let me show you what I mean. So, obviously the rules aren't met for a short, right? But when you get this market flow chart, you start to get these high volume areas, these green lines and these pink lines. And after a termination condition, this pink line or this green line, if it retraces back, is the most likely spot for continuation up. It's what we call an HVA trade. So when you get a termination condition like you did over here and the market comes up, it gives you a cool indication of where the market is most likely to continue in the direction of that trade, because this is a line in the sand created by buyers. So that's one of the ways John's using it. And for the people that use his white bar trade, identifying a breakout when that white bar comes off of a termination, Wayne's done an awesome job of working with that today. So you just kind of go, and when these pink lines break, and so it's more information. But if you don't know your rules, you're going to take shorts into termination conditions because you see a pink arrow, or you're going to take, longs against everything because you see a green arrow. So it's real important to have a foundation in there before you start adding extra charts, I think. Yeah. As much as I love it, I don't use it. No, that's okay. If you guys haven't noticed yet, I'm kind of the daydreamer. I'm a very artsy-fartsy kind of guy. And I do better personally with less information. I like 2 charts. I don't use a market flow chart. It doesn't mean that I don't see the value in it. I just choose not to use it in my own trading. But I do know it well enough to teach it. Termination. There's the white bar. Did you take an entry? 57.23. So you get in after the white bar, Wayne. I can't see your entries, so I'm wondering. And then there's your 1 down, 1 up for stop. I see that you did it. Beautiful. Second bar, stop. 1 up, 1 down, stop. 1 up, 1 down, and then you get stopped out on the trailing right at the termination. And Wayne, you're freaking killing it, dude. So I like the information. Wayne, you're doing a great job learning how to use it. And this is what I want you guys to see that are looking at his charts and you're like, what the hell is he doing? Because we say that sometimes. Termination on the large chart leads the way. Large chart leads the way, guys. And then he doesn't just jump in because it's a termination. He makes things roll. And he looks for an indication that it's actually going to go that direction. But the large chart leads the way. And Wayne, that's why you're finding success with this trade. Is because you're not letting this chart talk you into trades, but rather you're letting this chart tell you to look at the additional information for confirmation. That's what so many people tend to struggle with when they start adding charts, when they start creating new rules, is they get excited about it, right? Oh my gosh, I just learned about a white bar. Let me trade every white bar that I see. And guys, when I got my first market flow chart, when I was just a lad, and John said, hey Mark, check out the market flow chart. I think I took 127 trades that day. And maybe 3 of them won. It wasn't pretty at all. So it's important, first of all, that you remember when you add a chart that the rules still have to be met. There have to be rules that prove that they win more than they lose. And then for you guys that are drawn in by the siren song of John Novak, sorry if I'm giving anyone a seizure here. Don't stare at that market flow information. Your large charts, your dynamic Renko charts have to tell you to take the trade. And then you'll add market flow for a little confirmation. So, but it's a great addition. I am not anti at all. I'm actually very pro. But you don't need it. Some people just want it. Termination, no reason to go long, right? No momentum, termination. Termination, no reason to go long. Isn't it crazy? You're witnessing the fight. So guys, we've got about 30 minutes. Got about 30 minutes. Mark, Veronica, Hong, I would encourage you, drop one question in. Just pick one. If you don't want to flood the classroom with all your questions, pick one, drop it in. And what I'm going to do is I'm going to open up TechSmith Capture. And guys, this was downloaded on your computer, and I'm talking to my new people or anybody that hasn't posted a picture. TechSmith Capture, if you go to your search bar and start typing in TechSmith, it'll bring this up, this capture software. This is how we have a conversation. So it's real important that you practice with this. This is how you're going to get feedback. So if I stomp on this big capture button and I hover over just one chart, it's only going to give me the information from that one chart. So what I need you to do is left click in the upper left hand corner and drag it all the way down to the bottom right. And it works even better if you get timestamps and prices in there. And then when you release it, what it's going to do is it's going to give you the option to capture that image. And when you capture the image, you're going to have that picture of both charts. So on Hong at 11:03, it looks like momentum. Absolutely. Perfect recognition, right? So let's use some of the tools on capture. I'm using the arrow, and all of these are click and drag. So not only am I going to answer your question, so check it out. Rule number one, I'm going to use a call out button. And I'm going to say, rule one says have strong triggers. Momentum, right? And then Hong, you're already on it. Rule one is true, right? Separation between the small and large, the larger wide momentum is there. So then once I have rule number two, or rule number one, I have to go to rule number two. And rule two says no termination conditions. So it depends on where we're looking, Hong. If I'm talking about right here, price reached Fibonacci resistance, the triggers remain below. So rule number two is not met. There would be no trade. Until it reaches, I've got the potential to break these one-to-ones. So somewhere right around here, I might look for an entry on my small chart. So when I come to my small chart, right about here, when the smalls break through but the large haven't, I never get a pullback. I never get an entry before we reach that termination condition. So Hong, this is one of those times where it's just that 90%. There's just not room to make money. And there wasn't a pullback. If I had gotten a pullback from right here, let me go to my arrow line. If it had pulled back right here, then this would have been a beautiful trend trade. But instead of pulling back, it went straight to trouble. Does that make sense? So there wasn't a rules-based entry in this particular sense here. You start with momentum, and as long as the path is clear, potential to break, you're just waiting for the pullback. And if it doesn't happen, it simply may not be your money. And I think that's what frustrates new users a little bit, is you see the momentum and you're like, well, there had to be a trade in there. There had to be something in there. And sometimes there just isn't. And trading, we're not traders, we're waiters. We are professional waiters. So without the pullback, we just wouldn't take it. And then on that same sense, the momentum is still great, but the path isn't clear. And even though there was a pullback to support inside of triggers, because the path wasn't clear, you can see how the market continues down off of resistance. So it always goes back to the idea that first it's momentum, and then it's the path. And when these two are happening, that's when we'll look for the entry area. And the entry area initially is for the high probability trend trade. And then once you get good at momentum and a clear path, Hong, you're going to start to recognize times where you might be able to make a little money, without that pullback. You might be able to find a time where you can make a couple $100 without a high probability trend trade, but rather just using momentum. And one of the trades Nexgen teaches looks a lot like that, and looks a lot like this one. That's almost one, where everything is strong and there's a little break and a pullback, and this is one of those momentum trades that we teach. And there it is right here. And this will be kind of a next trade for you when you have the momentum. So what you do, Hong, is you sell. When you have, I'm going to do this. I'm just going to bring the colors up. It's almost a physics lesson. Let me take a picture of this. So in an uptrend, you buy, which is a long position, and most people are very comfortable with this. And then to exit, you'll sell. So that's that equal and opposite reaction. So we buy at an uptrend to get in, and then we sell to exit. And in a downtrend, it's the exact opposite. And I got hung up for about a month on this one. You sell or go short, and then to exit, you buy. And again, it's equal and opposite, right? And my problem with it was, how do I sell something that I don't own, right, Hong? How can I sell something if I don't already have it? And that tripped me up for about a month. And let me see if I can find, I have a video that explains it beautifully. And let me see if I can find it for you. But what it is when you have a sell, it's almost like saying, hey, do me a favor. Loan me $100 so that I can buy these gold coins, right? Loan me $100 so that I can buy some S&P contracts. And then when I get to my target, I'll give you your $100 back and I'll keep my profits. And there's a video, and I'll try and find it, and I'll send it over to you in Discord chat once I find it. But it explained it beautifully. It's almost like you're borrowing the money to go short with the promise to repay it down here. So if you get $100 to get in here, you give the $100 back, and then you keep the profits that you make. And that's probably a horrible explanation, and I apologize for that. Let me find the video. There was a 1-minute video that explained it beautifully. And I'm trying to remember who gave it to me. And I think it was my nephew. So I'll ask him real quick if he has it for me. I'm not sure if he's in front of it, but it's basically, I don't know. It took me a month to get over it, and I guess I could just say you have to just believe that you can sell it to buy it back the same way you can buy it and sell it back. And ownership isn't mandatory because commodities go to an expiration, so you never actually take possession of anything. All you're doing is saying, when I sell the market, it's my prediction that it will go down. And there's somebody that's down here that wants to go long. So they take you out of your trade. You buy and they buy, and it takes you out of the trade. So I'll see if Chris has that and get it to you, because I do a horrible job explaining it. And I'm really sorry about that. I need to find a better speech for that one. And this is where Hong's just going to shut me down and say, I'm out of here, Mark. That doesn't make any sense. All right, Wayne, not a termination condition. Sorry. So you're not coming from the termination, Wayne, and this is where I think rules are important. Why here and not here? How did you know there was going to be a second white bar? And I say this because what are your rules, right? If your rules say take the white bar and jump in, why didn't you? So I when I see little discrepancies like this is where I always ask you guys to re-examine your rules. What made you pause and then what made you act? Yes, Veronica, we certainly can. Because we want to be consistent, Wayne, right? 8-3 was fickle here, but you liked it better here. When they were still up, but they were tight. All right. And I always say stuff like that, guys, because I want it to be repeatable for you. I want you to be able to do the same thing so that you can create expectations on how often it wins and loses. All right, so Miss Veronica, we're just going to use the large chart. Your black highlighted price is the current price of the market, and that's going to go up and down all day long. So when we talk about using the most current bar to define momentum, to define whether price has reached an area as it has here, we're using price here. And sometimes price comes down, hits the area, and starts back up. That's what creates the beginning of this tail. On this one, price actually went up, and then it came down and actually formed another down bar. These tails are these pushes. So far, so good? Cool. So these lines are your fibs. And there's different lines on a large chart. There's Fibonacci resistance. So when price pushes up and reaches resistance, we know that this is an area that may stop the market. The same is true when price pushes down and reaches support. This is an area that may stop the market. But your large chart, I'm going to pull up a picture for this next one. Your large chart actually has Fibonacci areas from 3 separate time frames. Let me see if I can get the link on this. So what you'll see on your large chart, I'm trying to copy this video. On your large chart, you'll see skinny little lines that don't print all the way through the gray. These are actually from your 5-1, from your smaller, faster chart. There are going to be the wider lines, the fat lines that don't print all the way. These are actually from a higher time frame. And then the ones that move all the way down and go kind of into infinity, those are native to your 13-2, or your large chart. So by having these 3 different time frames, we're increasing the accuracy of where the market may stop. Hopefully this works. All right, Hong, there's your video that does an awesome job explaining how you can sell. So Fibonacci lines are going to come through from different time frames. These yellow 1-to-1s are 100% Fibonacci projections. These are like Fibonacci areas that print real time in the moment, and these are based off of previous swings. So from one swing to the next swing, what it does is it measures the distance and creates fibs in the moment. These divergence high lines are where the buyers were in control, and right at this specific number, the sellers took over and stole their momentum. So you see these lines as well. And the mid band is just a moving average that runs through the middle. But what you need to know about these is that every horizontal line on this chart has the potential to stop the market. And that's where we go through that recipe of if price reaches the area. So this would have looked like this in the moment. Price reaches the area, you go through that process of where are my trigger lines. And as long as they're below, you say to yourself, I shouldn't go long into this. It may stop the market, and it may break, and it may create a fight, and it may create a dance. Does that help? Is there something more specific that I can put together for you on that? I hope that works. And you can see how price is right at that fib right now, and the triggers remain above. So it's price reaching that starts the process, but it's the trigger location that gives you an indication of whether or not that area may stop the market, whether it has the potential to break, or whether it has actually broken. And then Hong, and all of you guys, whoa, here we go. You can download this, hit the download button, or you can probably click it and drag it over to your desktop, but it's only a minute long. And that kind of gives you that little insight on how you can sell. And that handsome fellow in the video does a much better job than I did on that. Cool. I hope that answered your question, Veronica. If it didn't, let me know, and I'll find another way to say it, or let me know what I missed, what you're still wondering, so that I can clear it up for you. Steve Diego, termination reverses the market. You call it a strong top. Odds favorable momentum. Absolutely. And you jump in. That's quite the hold. Potential to break. You're in on the wrong side, and it pulls all the way up to resistance. Okay, mistake not exiting here for a small loss. That's what I wanted to see, Steve. I was reading through it. These don't have to be big losers, guys. This momentum trade is hoping that it continues down, and then if it doesn't, it's okay. And then, Steve, there's your pullback right to resistance, right inside of those triggers. And then just get in with the reversal bar, absolutely. And it just rails. So I'm glad that this worked out. And this is one of the things that I talk about with my brother all the time, Steve, is these momentum trades that fail when the large chart looks like this very often turn into trend trades. So I like it. Kind of a risky hold. And then everything is up. The path is clear. There's your momentum trade. There's your jump in trade. I thought we saw this one. And there you are getting out right before trouble. Beautiful trading, Steve. And then for my newer users, so Hong, do you see this? Super strong triggers. And there was nothing in the way. That fib hadn't printed yet. That was an update. And he's got momentum on both charts and nothing in the way. And he just jumps in, jumps out. $400 in 4 seconds. Because of strong triggers. Because of a clear path. Because decisions are made at these lines. And if I'm in between the lines and I have all that momentum, it really becomes pretty easy to get paid. So a trend trade relies on a pullback to an area. Every color, Veronica, that is a great way to look at it. A trend trade relies on that pullback. A momentum trade is really just kind of a jump in with momentum. So, Hong, when you learn the trend trade, when you're comfortable with momentum, when you begin to understand whether an area is broken or not, these momentum trades will naturally fall into your trading plan. And a trend trade, and this wasn't one because the rules weren't met, the termination condition, takes this full pullback right to an area inside of triggers. when the path is clear. And so when this momentum dies, very often it turns into a trend trade. And in the beginning, you're only focused on that trend trade so that you can just learn a little bit about momentum and be able to identify it. And then, so Veronica, like you said, you don't trade into these lines that could stop the market. See how it hit support, and that's what started the push up? And see how it hit resistance, and that's what started the push down? And those super strong triggers are what broke through this area. And here where support breaks, it behaves as resistance. So we're just learning the basics in the beginning. We're learning how to identify that momentum. And Veronica, exactly how to learn how to respect these lines a little bit. Because look what they're doing, right? And it sucks when you have to sit still for 45 minutes. But I promise you guys, it sucks worse to give money. Nice job, Wayne. 2 one-lot trades for $1,100. It can be done, right? Have a good one, man. Go build a hot rod. So what we're doing right now is we've reached the fib. And the only way we're going to take a short trade by the rules is if at least these small triggers get to the other side, showing us that it has the potential to break. Until then, we're just sitting on our hands and we're being patient and we're waiting. We're waiting to see what it's going to do. And then there's that termination and all that momentum. And then Hong, this is the momentum trade that Nexgen teaches. With all of this strength, price will break through and snap back pretty quick sometimes. This will be maybe your second or third trade. But with all that momentum, it becomes pretty easy to capitalize on it. And that's right here. There's so many ways to make money. But your momentum trade, yeah, Morgan, right here in the instructions. How's that for timing? If you don't understand termination conditions, you're going to struggle with a momentum trade. So we learn about them first in the high probability. If you don't understand pinpointing your entries, trigger lines, stuff like that, then you're going to struggle with this look. And the same is true for every trade that we teach, guys. The foundation that you build in that high probability trend trade, being able to pick out these 3 things, right? And specifically these 2 things. Open the doors. They give you the foundation that you need to find more and more trades. And then for those of you that this is day 1, guess what day 2 is going to be like? The exact same thing. We're going to talk about advantages. We're going to break them down individually because recognition comes from repetition, guys. And then we're going to talk about charts. And the reason I teach class like this, I made this because someone was like, I want all the trades, Mark. Why are you holding back on me? Why won't you show me all the trades? Guys, this classroom is designed to teach you 3 rules on 2 charts to keep it very simple. Strong triggers and no terminations, and then finally the entry. And once you recognize momentum, once you can identify momentum, and Hong, you're already there on day 1, you're capable of seeing a market that's likely to continue in the direction of the trend. You've already got that advantage. And on its own, momentum is powerful enough advantage to take trades in smaller size, quicker profits. We're seeing these people do it with these jump-ins. And then when you couple that with a clear path, not only is the market likely to push, but there's nothing in the way to create a bounce. None of those lines, Veronica. And you have to picture the semi-truck doing 100 miles an hour down the highway. It's just hard to stop. So these 2 concepts, momentum and a clear path, are enough to create a trading plan, guys. But until you do, until you find your best entry, the high probability trend trade is a way to put it all together. Oh, Nathan, have a good one. Appreciate you being here. Until you can create your own plan. We gave you that very solid plan to follow. All you've seen is horizontal lines. So let's get you focused on the triggers first, Veronica. That's good that you're seeing the lines, because the lines may stop the market. But I want your first focus, to be momentum. So I'm going to take everything off of my chart except those trigger lines. And I want you to see something. When there's space between the two, the market goes down, right? And when there's space between the two, the market goes up. And when the smalls work their way inside of the triggers, that's where you start to see these retracements. And Veronica, this is your first goal, is to say to yourself, when the triggers are open, I have strength. When the triggers are together, I have weakness. Does that make sense? That's the first lesson. And most people get that pretty quick. But then you have to say to yourself, I have to start looking for lines on my chart, those horizontal lines. Because while strength is amazing, and strength pushes a market, and strength covers mistakes, and strength is rule number one, well, sometimes there's a horizontal line right in the way. And you're going to develop this trust that says, and this is such the perfect example right here, is that even with momentum, when price reaches one of those horizontal lines and the triggers don't break it, you'll know not to trade into that area. It might stop the market. And when the smalls smash through, there's your strength look. These areas have the potential to break. And that's all you're doing, is you're kind of getting real vocal about advantages, whether it's the advantage of strength, whether or not you have a clear path. And then once you can do that, you will start to find entries. And initially, your first entry is the highest probability trend trade. And you're only going to be there for a couple weeks, and you're going to start to see more and do more. But Veronica, the easiest way for you to get to where you want to be is to open your large chart, and I don't care where you go on it. Take a picture, just like that. And start doing this from day one, guys. Smalls above the large. Space between. Both wide, angled in the direction of the trend. This is strong triggers. Rule 1 met. Momentum. Odds favorable. Whatever you want to say. But what I'm trying to instill in you guys right now is that all you're doing is recognizing a look. You're not worried about an entry. You're not worried about an exit. You're not worried about whether there was even a trade. All you're doing is identifying strength. Does that make sense? And eventually, you start to believe in this. You start to trust it. You start to insist on it. And then the same is true where you're going to go back and you'll just take a picture. And I believe that pictures are how you're going to get to where you want to be. So I take a picture here and I draw an arrow and I'm going to type. And guys, when you type, your brain creates a correlation of the words and the look. And you can say price bars reached resistance. My triggers stayed below. This is a termination. No trades into the area. Not a clear path. Rule 2 not met. Wait, right? And what you're doing is you're saying, all right, these lines do seem to stop the market every now and then. So now you're developing trust in the idea that you're not going to trade into these areas. And then finally, you're just going to put it all together, where you're going to say to yourself, all right, I have momentum. And because I have momentum, let me make sure my path is clear. And if my path is clear, you might wait for a trend trade, which uses a pullback. You might take a momentum style jump in trade to try to capture a little piece of the move, right? You might let this termination condition roll your triggers and look for an opportunity to go the other way. There's a million ways to make money with the software, but once you get the basics down, you will find your opportunities. But I encourage you guys to keep it very simple in the beginning. Steve Diego says, take it from someone who's been around the block. These guys now have the best training in the business. Thank you for that, Steve. I like what I do. I do love to teach, guys. It makes me happy, especially when you guys find success. And if you think struggling is a failure, you're mistaken. Everybody in this room will struggle at some point. Even if it's learning a new trade, you'll struggle at some point. And the easiest way to get over your obstacles is to ask for help. Hong, did you watch that video? Did it make sense? I saved it because I'm going to be ready for the next person that asks me that question. My nephew Chris sent that to me and I was like, that makes perfect sense. I hope it made sense to you. Or maybe you haven't watched it yet. That's okay. Oh, no worries. I like that. I love having someone hang on my every word. But guys, that's my class.